Good morning, friends and traders. Welcome to the opening call, the show in which we dive deep into the abyss of futures charting to discover how to become better lovers. I'm Jack Pelzer, joined by John the Iceman Hoagland. Hoag, how you doing this morning?
Doing well. It's good to see you, Jack. I know everybody's missing Eddie, but he'll be back with us next week.
I'm missing Eddie too, John. We're kind of like the misfit toys here, stuck around Thanksgiving, right?
That's what I used to call the trading floor, the island of misfit toys.
Yeah, that's an apt name for it, indeed.
Totally. Yeah. So, welcome everybody to the opening call Tuesday, November the 21st. Big news today. We have Matt Miller from Trades by Matt with us today, and every Tuesday moving forward. We're very happy to have him on the crew. Welcome, Matt.
Yeah, we'll have Matt on at 8:30 today for Fast Markets. Should be fun. I think, Hoag, you said we have Deanna stopping by for a special visit today as well.
Yes, we do. We also have Deanna stopping by about 11 o'clock for a special visit today. Always a pleasure to see her smiling face.
Yeah, I think you guys are going to be joined by JD the Dancing Bear too. So that should be a fun hour of trading.
Awesome.
We got Coach Paul coming on at noon today. And then, Hoag, we might stick around for a couple minutes to do the Fed minutes.
Yeah, I think that's a good idea. It's a good idea, Jack. You know, we'll stick around a little bit. We'll kind of weed through some of the things that are coming up on the wires that they said about the at the Fed meeting 2 weeks ago, and watch any market reaction. Might be kind of cool for us to stick around and view all that together.
Yeah, for sure. It looks like we already have the Ligma team here in the chat. Good to see y'all. So yeah, you're gonna be punished with a lot of me and Hoag and a lot of Matt today. That's not the punishment. So should be fun. Got any economic releases we're looking at this morning, Hoag?
Well, yeah, we had the 7:30 numbers. This Canadian CPI numbers came out. We also had the Chicago Fed National Activity Index come out at 7:30. Came out minus 0.49. Now, that's an indication of slowing activity in the seventh sector, I guess, of the United States. It's Iowa, Wisconsin, Illinois, Indiana, and Michigan. So a little bit of slowing business activity, which may actually be somewhat viewed as anti-inflationary. Let's see how the markets respond to all of this. 7:55, we had the U.S. Red Book come out. Haven't had a chance to really weed through those numbers yet. But at 9 o'clock, we have the big one for the day, existing home sales. The other big one for today is 1 o'clock, the FOMC meeting minutes due out. Of course, we will hang out for a little while during that release, and we'll see what happens at that point. And 3:30 today, the API crude inventories come out. Apparently, the EIA will be coming out tomorrow, Wednesday, at its usual time, and I think we're going to have the nat gas come out tomorrow as well. So as far as earnings today, Lowe's, Best Buy, Dick's, Burlington, they all came out, mostly with kind of mixed results. Dick's Sporting Goods was the only one that beat both expectations on earnings per share and revenues. We also had Abercrombie and Fitch come out. We had Kohl's. Most of them was kind of mixed numbers. After the close today, the big one everybody's waiting for, NVIDIA. And then, of course, Hewlett-Packard also due out after the close today.
Honest question, Hoag. Have you ever in your life been inside an Abercrombie and Fitch?
I walked past one once in the mall. I think I stepped in just briefly, but I wasn't in there for very long. I don't have the shopping gene, Jack. I just, everything I'm wearing was at one time a gift.
That's kind of the same boat I'm in as well. But, well, good. You shouldn't be spending too much time there. As you said, some slightly disinflationary stuff with the retailers this morning that's weighing a little bit on stocks. You mentioned Best Buy. They are forecasting a softer holiday season as buyers are hunting for deals. So I guess with what you said about Dick's, it's down with $1,000 phones, up with $200 aluminum baseball bats.
There you go.
Yeah, indeed. A lot of people buying golf equipment, I guess. So it's all kind of painting the same picture. Got the ES down a little bit. Also, just to follow on to yesterday when we were talking about OpenAI. When we talked yesterday, 500 of the 770 employees had said they were going to quit. Now you said it's up to 700, Hug?
Yeah, 700 of the 770 employees said if they don't bring Sam back, they're going to quit.
That is loyalty there.
That 100%, right?
Yeah.
That's love.
MP, if you're watching, we'll do the same for you.
100%.
All right. Well, without further ado, Hoag, what do you say we dive into these charts?
Sure. Starting with the E-mini S&Ps. Always starting with the daily. Now, if you guys were here yesterday, at one point, our good friend Andre said, well, Hoag, I guess we're wrong looking for any kind of major pullback, and we should probably start looking for longs. On that note, I said, the high is probably in, and I don't know for sure if that's the case, but the market always looks the best at the top and the worst at the bottom. My dear old dad used to say that quite a bit. On the daily, the weekly kickoff high rejected price above. Yesterday, we closed below it. Settlement was 45.62 and a quarter. Weekly kickoff high was 45.67. We closed 34 and 3/4 points higher yesterday, and we added approximately 6,000 in open interest. The open interest was good, somewhat inert, I would have to say. Not a big jump in open interest, although it is continuing higher. We had about 9,700 the previous day additional open interest, but we do see volume continuing to fall off. Now, that doesn't usually scare me because the volume always comes in on the downside with the equities markets. So we do see volume slowing. Open interest increases just a little bit, but at a kind of a slower rate yesterday than the previous day. On the 30-minute chart, this is going to be an interesting, as they always are, an interesting trading day.
Indeed.
We have the look above weekly kickoff high and the rejection thereof. Settlement again, 45.62 quarter. Overnight inventory is short. It has pushed price into range and into value from yesterday. That's usually going to tell me I got to stay patient. It did not work for us yesterday. The best trade location of the day was on the opening range, and the market pushed higher all day long. Hopefully, you didn't try and fight it. One of the things that I usually keep as a general rule in trading is when the opening range is the dead low of the regular trading hour session, most of the time, I'm going to be looking for longs. I did take one short trade yesterday that I caught this pullback, didn't fall in love with it. It was just kind of a pullback. And then, of course, the market, as we all know, continued to grind higher all day long. We did not have any delta divergence, so that kind of tells us that the open interest that we added yesterday may be short time frame laggard buyers. Those are always the last ones to get in. When the public knows about a rally, the rally is going to be pretty much over. That's, again, a general rule. So in the profile, there are two distinct areas that I'll be focusing on today in the profile from yesterday. It's a double distribution trend day, almost kind of a triple distribution trend day, because it's these areas that the market didn't spend a lot of time and didn't exert a lot of volume. These should be excess and supportive. We've already moved through this area of single prints. Some people call them single TPOs, areas of excess or rejection. That area is 45.56 quarter here, down to 45.50.75. Where are we now? We've already kind of looked through this. Again, the overnight, maybe not as important as in the regular trading hours, but the market does continue to try and can push to the downside. The next area of interest that I'm looking at is 45.44.50 to 45.43 quarter. Kind of a small area here, but again, single prints, single TPOs. Area of rejection on the push to the upside yesterday may end up being supportive for us today. If we can't hold those levels, we've got an excess low here, and then points below. We've been talking and saying that there's a lot of weak structure down below the market. It's only going to be important when the market heads towards them. Where did we trade to this morning? Yesterday's volume point of control. It looks like almost an exact an exact hit of it. It didn't quite hit it. This would have disappeared beyond it. So right down to it. And, you know, we're going to take a look and see on the opening if we have any good opportunities. Probably be watching the opening range trade. Again, this area down here, that zone 45, 44, 50 to 43 quarter, very small little spot there, but it's single TPOs, it's excess. It's rejection of price through that level yesterday. We'll see if it ends up being supportive for us today.
And just a quick reminder that weekend kickoff high is very close to the September highs from the ES from back then. 46.20 would be the July highs. So we're ways from that, but this could be a point where we see things slow down, or we've been on a pretty relentless 3.5 week trend in the equities. So
yes, we have.
Trade in the video.
Yes, we have. Yeah. Everybody's looking for the Santa rally, right?
Yeah.
Santa rally.
Looking for the Santa rally.
Yeah.
The best reason to ever buy stocks.
So these swing highs that I think Jack is kind of talking about here, we're not going to see it here on the daily chart here. I've got one of the swing highs at 45.66, the other one at 54.97, and that's of course off of the continuation chart. I believe I put those on there just so we could kind of keep an eye on where those swing highs are. We tested to it yesterday, showing signs of rejection. Thank you, Jack.
Radio.
All right, now the NASDAQ. All right, so a little bit of a different situation. It always seems like the NASDAQ and the S&Ps are saying different things. Both the NASDAQ and, well, at least the S&Ps, hang on, let me double check this. 30-minute chart. So yesterday, we did put in the recent high in the regular trading hour session. We were talking about the idea that this high would not hold because it happened in the overnight session. We took it out yesterday. Our recent high is now in the regular trading hour session in the S&Ps. In the NASDAQ, maybe not so much. Here's the daily chart. Recent high, we put in a higher high last night. So we still have an overnight high that is the recent high in the NASDAQ. Well, we'll see how that plays out. Weekly kickoff high is again going to be pivotal. The market traded to it, basically closed inside the zone of the weekly kickoff level. The previous swing high that we see right back here was 16,115. We traded right to it, basically to the zone yesterday. We looked at it again last night, put in an overnight high, recent high, and then we've been coming off ever since. So this weekly kickoff level is going to remain somewhat pivotal to today and perhaps into the future, because the market really settled right on it, right in that zone. Weekly kickoff high in the NASDAQ was 16,082, settled at 16,086 and a half. I would definitely call that the zone of the weekly kickoff. We seem to be coming off. Yesterday's volume was lower. We did increase open interest by about 3,600 contracts, which is, to me, a more meaningful number in the NASDAQ than the 8,000, 6,000 in the S&Ps, because the S&Ps are so thick. I mean, there's 2.5 million in open interest there. Not so much so in the S&P and the NASDAQ. NASDAQ is a much less liquid product. Taking a look at the 30-minute chart now. Overnight inventory is short. Here's that overnight high right there, just a little bit over yesterday's high. Again, testing up to that swing high, finding resistance there. Again, overnight inventory to the short side. The market being pushed back to the point of control. We have market back in range, back in value. It was a double distribution trend day. We're already trading below the area of potential rejection yesterday. This zone here is 16,057 on the upside, 16,033 on the downside. When we come back towards that level, this area might be difficult for price to get back through. We do have overnight inventory to the short side. We've got to keep an eye out for some inventory adjustments after the open. If we don't see sellers continue to push price lower, some of these weaker hands overnight shorts may decide to get out of some of that, which could give us better trade location if we are looking for shorts. The profile, again, double distribution trend day, area of value over area of time and volume. Area of time and volume, that area, that zone that I mentioned, 16,057 down to 16,033, kind of an important level to keep an eye on for us today.
Yeah, NVIDIA.
Right. And did we mention NVIDIA?
I hear it's my uncle told me to buy it.
All right. And hopefully you did a while ago.
Oh, yeah. But NVIDIA is a proxy for the whole AI industry and thus the entire NASDAQ overperformance recently. So
yes,
get ready to rock.
That's a good adjective for it. Overperformance, right?
Mm-hmm.
Until it isn't, or it is. One of the two. All right. The roll is over in crude oil. Thank goodness. We've got a couple, maybe 2, maybe 3 good weeks of being able to look at volume and open interest with some clarity. Yesterday's rally, shockingly low volume. Shockingly low volume. We also lost 11,000 in open interest. That rally yesterday was hollow. There's nothing behind it. There was no volume. There was no new business coming in. It was old business being taken out. Short covering takes buying power away from the market. So if we can't, continue this push to the upside, I'll be looking for a move back to the downside, which just really kind of makes sense. Open interest dropped. That's not a function of the expiration. Overall, open interest dropped on a push to the upside on lower volume. That's a hollow rally, if you ask me. Now, of course, anything can happen. ACH, we say that all the time, but in the kind of longer time context and some of the other nuances that we look at, that's a weak rally, and a lot of it happened in the overnight. We pulled back to the gap. Well, we created the gap actually, and then we pushed higher, but the rally didn't hold. By the end of the day, we pulled price back to the center of the range. Overnight inventory, maybe a little bit short, probably reconciling and giving us an opportunity. And I know Deanna's probably watching this right now. We opened below value. If we reject value from yesterday, I could see this market coming in and taking out the gap that was created from Friday to Monday. We don't know what's going to happen, but again, if we reject value from yesterday, then we're starting to look for some possible shorts. It'll be interesting. We'll see what Deanna has to say about this at 11 o'clock today when she joins us. Hopefully she's going to have a good day, and hopefully you all have a good day. Take a quick look here at gold now.
Yeah, let me answer a quick question from Philip. Had a good one. He said, what does it mean? And I got this one because it's my favorite word in futures trading. What does it mean if the continuous contract for the NQ took the high from July, but not the current Z contract? I think that's referring to contango. That's because the futures price, because remember, what we're trading right now, the Z is a December future. So in July, people that were trading it, if it wasn't on the market, were trading for the delivery of it, that it's out in December. So the price can be different than the continuous one, which just plots the on-the-run futures. I think I got it there, Hoag. Any notes?
Perfect.
Okay.
Perfect. Yeah, thank you. And from where I sit, Jack, if you have information in the current front month, you use that information. If you don't have, if it's too long ago, where you don't have information in the current front month, in the current month that you're trading, then that's the only time I'll really look at the continuation chart for those kinds of levels.
Right. Something up.
Yep. All right. So here's gold. Looking like we kind of set up a bull flag for the past couple of days. Very indecisive. Volume wasn't all that great, although we did increase volume yesterday, and we added 3,200 in open interest. What direction did that money come into the market? We're going to see that on the 30-minute chart. So after 2 seemingly indecisive days, we are getting a test of weekly kickoff high, pivotal. If we show meaningful participation above it, we continue higher. We've got the swing high here up at 2019.70. Could be a good target for this move. If we fail and we come back down below, then possibly we could see a pullback towards lower levels. The thing about it is, adding 3,200 yesterday, we've been talking about the idea that this is a short time frame controlled market. That has now possibly changed. Not just the fact that we had an increase in open interest yesterday, now certainly with the fact that we are testing weekly kickoff high, which is areas that I believe longer time frame traders will be forced, want to, or need to adjust inventories. We'll keep an eye out for any divergences today in gold. So here's the way the market traded yesterday in regular trading hours. It moved higher. So my assumption would be that the open interest that we added yesterday was new longs. Those new longs are continuing to get paid. Overnight inventory was exceedingly large to the upside, to the long side. Very little chance of coming back and closing this gap. Now that I've said that, the market loves to make a liar out of me. We're going to have to see how this plays out. We do have some opportunity up around weekly kickoff high, as it gives us the opportunity, the chance to limit risk in and around that area. The profile yesterday was a normal variation, neutral day. When we see those, the market used a lot of its ability to facilitate trade. And we all know, Jack, that the market's job is to facilitate trade. It makes sense that the market is now seeking new levels to facilitate that trade. Watch weekly kickoff high here. It might be one of those opportunities. And occasionally, they do become magnetic. If there's not a quick decision by longer time frame traders in this area, it can become magnetic and very choppy. If we do see some good participation above this level, then we look for it to continue. If it comes up here and dies, we look for opportunities in the opposite direction. Remember, there's a lot of longs in this market. That could be enough to kind of pull us back down below weekly kickoff high, at least for a time being. But right now, we've got a weak high in the regular trading hour session. We got an even high. Some would call that a double top. Some call that an unfinished upside auction. Keep an eye on that, and let's take our deep breath, stay humble, grateful, creative, and centered in your trading today. Happy Tuesday to everyone. We are getting ready for the holiday, and let's end up the yeah.
I got to give a few announcements I've been told to. First off, for the top quiz people, I finally received that code about 8:13. So hot and fresh off the press, but because some people are out, I'm kind of pulling double things. I'm on the show today. So I'm going to talk to the people in back during this break and get them to send out that code. Second, I've been asked, a few people are asking about the security incident. So I am going to read off what I got from Danielle about the update. All right. We had a security incident last night where hackers changed some links on our website header and footer. It was caught and resolved within minutes. Please double check that you're logging into your dashboard at the right link, which is app.topsteptrader.com. I won't even say the other one. It would just be confusing, but make sure it's that one. If you feel you may have fell victim to this phishing attempt, please go in now and change your password. If you fell victim and entered in any banking information, please call your bank immediately. All right, that's what I know, and I will let you know if I hear anything else on that. So sorry about that.
Well, I mean, these things do happen, and I'm very, very thankful that our tech team caught it as quickly as they did, and they were able to rectify the problem very, very, very quickly. So I'm hoping little to no people were affected by it. And
it happened within minutes last night, like 6, somewhere around there. But yeah, just double check and change your password to be safe if you did try it. Okay, Hoag, you ready?
Yeah. Let's get ready for fast markets. Don't forget we have Trades with Matt with us today. We have Deanna coming on later on to join us. We've got Coach Paul for group coaching. We're going to hang with you for a little while after the FOMC minutes come out. And we'll look forward to having a good day. Get your coffee ready. Don't forget, always pray for peace. We'll see you in a minute.
It's 1 minute until open. Do you know where your futures are? Welcome to Time. I'm joined by Hoag and Trades by Matt. Matt, welcome again. Great to have you.
Glad to be here.
Yeah, it's great to have you with us, Matt.
Yeah.
We're looking forward to name some other trades.
Right. Yeah.
Right. So, yeah, we are about 20 seconds to the open. I'm probably going to take the opening range trade.
I was going to ask you if you were doing that. Last time I talked, you said you were going to commit to it for a few days.
I did, and it was profitable. Yesterday, because we opened in range and in value, much like we're doing today, I didn't do it, and it turned out to be one of the best trade location of the day.
Yeah.
So I'm going to see. I'm just going to take the risk and see what happens today, as long as it's not too much. We got a $2.2 opening range here so far, so nothing tremendous.
The tilt's got the NAS at 74%. That's kind of crazy. I haven't seen it that high this early before.
Yeah, this early maybe. It gets over 80% occasionally, but that's pretty big.
Yeah, that's a lot of longs there, huh?
Yeah, seriously.
Interesting.
Mm-hmm.
So
I like to sit around for the first 10, 15 minutes and let everything get kind of shaken up.
and normally that's something that I do. When I first started looking at the profiles,
Yeah.
you know, the first half hour was always just too choppy, too freaky for me.
Right. I tried a little overnight short that I got stopped out break even. That would have been real nice. At
We are short
611.
Where'd you get short from, Hoag?
Hang on 1 second. Let me get my stop in here. 53.5. Okay, we are short at 45, 48, 50, 48.50. Sorry.
All right. As a reminder, that opening range trade, Hoag uses the first minute and then sets the stop a few ticks beyond the other side of that opening range, and then tries to let it go.
Yeah. So on this platform, this gold bar is the first minute. So we put the stop in just 1 tick below the opening range. My stop is currently at 43.5. So that gives me a little bit of space to take out the stops above the opening range if we get there. If you remember last week, there was a trade that I took. It was a long. The market took out the low of the opening range by about three ticks after it got us long. We stayed in, and that ended up being a pretty decent trade. So we're going to see how this plays out for us. And, you know, most of the time when the market is in range and inside of value, I'm going to try and stay patient, which cost us yesterday. Opening range was the dead ass low yesterday. We didn't take it. We should have. I mean, look at the profit on that. What was the range from yesterday? 56.5 points. So we probably could have, if we got out at the high, we probably could have gotten 40 points off of that. If we got out at the high.
Strong F there, Hoag.
Yes, you got to stay in that sucker all day long. All day long. Now, you know, I'm not real confident in this because again, we're in the opening range. We're in range. We're in value. We've got overnight inventory that's pretty heavily to the short side.
Yeah.
If we don't see sellers come in pretty quick here, those overnight shorts are probably going to bail pretty quickly.
Yeah. On the NAS, watching it, for me, it's like every time we have like you said, inventory to the short side, I kind of always look for an initial pop. And then today we got volume put in at the 80s. And I kind of talked about it last time, but I love 80s and the 20s as rotational numbers.
Right.
And so all that volume in at 80 and just kind of the number itself, kind of decent for a little pop.
It took us right down to it, right?
Right. 80.25 ticks out, and then all that volume comes through.
Now, Matt, are you mostly trading NASDAQ or exclusively? Or
Yeah, I would say I'm like 90%. I recently reworked myself back into the world of crude oil.
Okay.
I used to only trade crude, and then I rotated to the NAS like 4 years ago. And then I recently kind of started dabbling again.
Well,
what do you think? What do you think in crude?
I haven't really looked at it too much today. It looks pretty choppy so far. So I don't really think too much on it.
I can hear D
pop out of 78.
I can hear D saying, you know what? We looked inside value from yesterday and rejected. I feel like she's looking for shorts, maybe a gap close from Friday to Monday's range.
Yeah, I mean, I like the value area low from yesterday rejection, 77.60. That's a pretty solid short typically, but we'll see. My way of trading crude is that whenever the NAS is not having price action that I love, I go trade crude, and then vice versa. So
there you go.
Well, it's kind of not diehard on either one right now.
Yeah, I hope you can stick with the NASDAQ today because we need you with MP at Legoland. We need someone to trade what 90% of our traders are trading.
Right. The NAS is just good. It's like really good for scalping, in my opinion, which is what I enjoy doing.
Yeah, more action.
Yeah.
Boy, you're right, man. It went right down to that 80.
Yeah. So now we look for now I would be looking for 20 upside and then see what happens from there. Assuming we could pop the opening range high, but at 80 level with all that volume in there, it's too early for me to really feel comfortable wanting to take that trade, especially kind of after being out for a few days.
Right.
Down. I just don't love doing that right away, but it's a nice solid trade. Like if that was the same thing that happened, in 20 minutes, I would probably want to take it.
You were at the F1 race, right?
I was, yeah.
When there's a lull, we got to dive into that. I have lots of questions.
Yeah. I mean, the media was all over the place, both positive and negative. So I'll definitely give my insight on it.
Did you get any interviews?
No interviews, no. But people were definitely polarized on whether or not they like it or not.
That's Vegas in general, I think.
Right. Okay, let's see if we can pop it.
You still inside. Well, still haven't taken out the high of the opening range in the NASDAQ.
Right.
That move to 20 would be a nice little stop run above the opening range.
Yeah. Yeah, that like 20 to like, what is that, 26 or 27 or something like that would be pretty interesting in my opinion. We're just sitting on volume here.
Yeah, we've got some pretty negative delta here in the S&P is negative 2,400 in the regular trading hour session already. Not really that successful pushing it to the downside here.
Yeah.
Yet.
Negative. Last time I was on, you said that you had an example of gold, I think, potentially for for delta.
Yeah,
I want to talk about that later too. I've been
for sure
thinking about it for the last week.
Yeah, for sure. I got to dig it up here, but I will certainly be happy to show you.
Yeah, that'd be great.
Yeah, I'll find it here. I don't want to go digging too much right here. So here we are. We're still hanging at the low. We're right at our entry, 48.50. Got to take out this point of control from yesterday.
Yeah, sitting right at it, huh? Almost.
Yeah, went right down to it on the before the open. I'd like to see us take out that overnight low, take out that point of control, and hold below that.
Yeah,
this is riveting.
I'm using the if you'll forgive me, I'm using the Andre indicator. Andre said, well, I guess we better start looking for longs yesterday, which now we're looking for shorts. So we took out that volume profile here on this platform. We stopped a tick from it on my T4, the volume point of control. But we're hanging here.
Friday's high could be an interesting spot to kind of go back into. I think it's Friday, Monday, Friday. Yeah, Friday's high.
Right here.
940s.
940s.
Ish.
Let's check it out on the NASDAQ here.
Assuming we actually get the flush. I don't know. I'm not sold on flushes personally on the NAS right now.
940. There you go. Yeah. That's really kind of where that initial push up yesterday, leaving the opening range at the low of the day. That was the kind of pullback. The early pullback was down to that 940 level. I like that level.
Yeah.
Here we go. Just about the high of the opening range. S&P, no. Took it out by
76% long right now.
Unbelievable.
Yeah, that's crazy.
Yeah, I believe it. If it's cheap on the chart in the short term, I think there's a lot of people who are looking to just buy it.
The S&Ps are pretty much even, 54% long in the S&Ps. NASDAQ, a lot of longs in there.
76. It's crazy.
We just got up to your 20 level.
Yep. That's a full 80 to 20 rotation. So that's kind of that's the move that I love and I try and bring up when I bring it up often just because it happens so frequently. But is
there a name for that?
I call it the magical 80s and 20s. I don't know. I don't have a good name. We need to come up with a good name. Chat, this is the time.
Yeah,
put your input in.
Give us the 80-20 names.
Yeah, the 80-20 rotation. I just call it the magical 80s and 20s because that's what I kind of figured it out with my stream years and years ago, and that's what we had talked about. But we need a new one. But it's good for 40 points when it's around, around the.
It certainly was there.
I would like for us to sweep it, honestly, though. I don't like a hard rejection on it, just like we just had. I kind of want us to sweep it. Maybe, especially with the tilt being the way it is, I would love to see like a kind of a push into 30.
And then
that little
come back down
micro
below.
swing low on the 5-minute chart, like 31, pushing to 31 with the tilt being at 76 to 80 would be an interesting short for me, especially if we had a delta divergence on the 22 range. That would be what the ligma that everybody talks about.
Yes.
That's kind of how I like to piece everything together in my mind, is like, okay, I have like 4 different things that kind of all come together with some like common sense price action and try and execute off of it.
Right.
Unfortunately, it just takes a while for things to come together a lot of times. But
yeah. So if you do have questions about what the tilt is, you got that little slide up there kind of explaining what it is. But it's a real-time snapshot of all of the traders in the trading combine and the XFA accounts, their aggregate position. If the aggregate position is long 80% of those with a position in that product are long, 20% are short. Can give you a really kind of an overall snapshot again of what the retail traders are thinking, what they're doing in our time frame. And these are people that want to perform. It's not just random practice accounts. These are people that have a desire to perform well. So it gives it even more importance.
Right. Yeah, I think that's the key, because people have talked about like, oh, well, there's probably just people yellowing or whatever. But like, you take into the fact that like people are trading their XFAs on here. They're wanting to make money.
100%. Yeah. Even the trading combine folks, they want to get to those XFA and funded accounts.
All right.
Matt, what indicators are you using on your 22 chart?
22 range. So I'm using cumulative delta down here, which I don't know. I always have to pull it up on this stream. Cumulative delta down here. And then I got a volume histogram on the right side, just so I can kind of see volume by price levels. I have labels on kind of what I find important. So initial balance, yesterday's volume profile, and then overnight highs and lows. And then my little my lines here, it's a VWAP with 1, 2, and 3 standard deviations behind. So plus and minus. So 1 standard deviation off VWAP, 2 and 3. I guess I have 2.5 in here too. But nice. The standard deviations I have them up pretty much purely for like super trend days. I don't use them a whole lot unless we are massively trendy. So like they've been nice the last couple of weeks. Because when we are just in straight up rip mode, like you'll find, we're bouncing between the 2 and the 2.5 or whatever it is. Like 2 and 2.5 is very common for super rippy trend days. I have zero importance for them when we're just kind of going sideways like we're at right now. Just to be perfectly honest. Most of my charting on this chart is me watching where we're at with volume from like a standpoint of like either points of interest or support and resistance, whatever you want to call it.
Sure.
And then with delta.
Now, is that volume histogram, does that include the overnight session?
It does, yeah. So all of my volume histograms include the overnight session, and then my labels for value area are just the open. So the 8:30 open is my value area labels, and then my histogram of volume is from the 5 o'clock open through the day.
Okay.
Thank you.
Yeah. The reason I have the overnight volume in there, and I don't know, maybe I've just done it that way for forever, so maybe there's a reasoning to not do it, but a lot of like positioning does happen in the overnight, in my opinion, or I've seen it enough times to where I do kind of care about it, but I don't know if it's best to do that or to not. So if y'all have any input on that, let me know. But
if it works for you, it works.
Right. I'm always open to experimentation though, at the end of the day.
Yeah. I just said in the weekly kickoff email, I don't discount any tool, time frame, indicator, anything anybody's using. I mean, if it's in the right hands and you do things right, you're gonna be fine.
I agree. Yeah, so that's my 22 range. My 1 minute chart. I watch a 30-minute chart up here just so I can kind of see like general big picture what's going on. Mm-hmm. My 1 minute chart is my initial balance chart, which is what's providing the labels everywhere else. So first hour of the day. First hour high and low is initial balance high and initial balance low. You'll see after that hour, it typically will act as a nice support or resistance, which is why I keep it on there. These little colors on the right side of the 1 minute chart are it's just a visualization of the DOM. So it's liquidity. It's the
Understood. Yep. Got it.
Orders on the books.
Yep.
So that can get kind of confusing when people are watching because
It's almost like
volume
bookmap.
everywhere else, but it's so it's different. And I watch the DOM a lot. So
You might have to pop your headshot back up there in the top right. It's looking a little blank again.
I forgot. I was talking about that last time too. I have this this spot just open. It's so natural for me to look at. I don't even notice it up there, but
Yeah. So for those asking where MP is, I believe that he is at Legoland,
Yep.
which is a thing apparently.
Yeah, and we have Michelle in the seat that Danielle normally sits in. Michelle, thank you very much for being here and helping out with us.
happy Thanksgiving week.
Yeah, right.
I'm getting some traveling going.
Yeah. Matt, what are you thankful for?
My kiddos. I got this year we welcomed my second baby girl. She's
Nice.
7 months old. So
Awesome.
that's what I'm thankful for this year, or super thankful for. And I got 2.5-year-old also, so it's a full party here.
There you go. You're in zone defense now.
Yeah, I am absolutely. But definitely fun with them around, and I'm glad that they are around. Thankful for it.
Asking for a friend, what is the work difference between 2 kids and 1 kid?
Okay, I think it is
The multiple.
right, and I can't speak to it past the 7th-month-old. Okay, so like you're getting the first half of the year down, but I think the first 3 months it is a little bit more. First 3-4 months, a little bit more because they're waking up in the middle of the night or whatever. But now that she's sleeping, I have 2 girls, so now that they're both sleeping amazing, my little one is constantly entertained by my big one. So in my opinion, the workload is like not that much more. It's like a little bit more work to like put them to bed. That's probably the biggest one. Is like putting them to bed or getting them in the car or whatever. But like during the day, they are already starting to like self-entertain each other, which is amazing.
It's like,
Well, thank you for that viewpoint, because Tom DeRick is telling me 2 kids equal life is over. So
And I mean, I bet like 3 or 4 maybe, but 2 is easy. Well, easy is a strong word, but like, if you've already done 1, you can do 2.
well, the biggest risk a trader should ever take is going from 1 to 2.
Oh yes, lots.
Going from 2 to 3 is
boats,
easy.
Whatever it is.
All right, back in the 80s. Kind of interesting. Delta's heavy.
Yeah, I remember the 80s.
I bet you do, Hoag.
I will say, on the 1 to 2 kids, my little one is now like, she's like very actively crawling around and pulling herself up and kind of taking little baby steps on stuff.
She's cruising.
Yeah, she's definitely cruising. So it is that is a little bit more challenging because you do have to kind of have your head on a swivel. But yeah,
I remember those days, man. My daughter's 26 and my son is 24.
nice.
They're pretty much self-entertaining now.
Right. You hope.
Somebody mentioned yesterday that they're at the age where you just have to give them money. But they're the best thing ever. Wonderful thing to have. Wonderful thing to give thanks for.
Yeah. And now if you ask me, I would have to say the same thing. I can't let Matt do kids and then me be like, oh,
No, I got plenty of stuff this year. I mean, I can keep going. Taking some awesome trips this year, which has been super fun. Very thankful for that. I love getting out of the house.
Jack, you were next. What are your things to be thankful for this year?
Oh, of course, as Matt has laid the foundation. Of course, I'm thankful for my family. My son is just over 2 as well, Matt.
Nice.
So, yeah, just very exciting. Besides that, thankful that we got a place to live, enjoying the house I'm in right now. It's fantastic.
Good. Very nice.
Are you in Chicago?
I am a few blocks away from Chicago.
Okay.
I just moved last year to Oak Park.
Cool.
Oak Park's a great place.
It is. Like it. Right
A
near
lot
the
of
L.
history. A lot of history. Well, we just been, driving lower. Now we're back to where we started from here. And my entry is the halfway mark of the range so far today.
Holiday
I would have
week.
been interested in getting long there had we gotten volume down in the 80s. Like if point of control would have flipped, but we just snapped right back up to 16K. So, yeah.
Well, I have a question for a poll. If JD or Michelle can put it in there. Given what we're seeing so far, how many of you are trading tomorrow? I.e. the day before Thanksgiving. I'm just kind of curious.
It's a good question. I know we're going to be here.
Yeah, we'll be here. As they say, diddling in the middle.
Well, yeah, but it wasn't at first. It was it was actually the dead ass low at one point. I got somebody fading me. They're long at 47. Hope you make some money on it.
God bless you.
Absolutely.
Y'all eat breakfast before you trade?
Don't usually have time.
Yeah.
Sometimes I'll have a protein shake or something, but didn't get one today. So the only thing I had for breakfast this morning was coffee and water.
Yeah.
I mean, when I was trading at the board of trade, I used to usually pick up something disgusting, but I was in my 20s then. My body could handle it. Yeah. Now I ate like a couple of pre-cooked cold sausage links this morning.
Huh.
It's laziness more than anything.
Let me guess. Do you get those at Costco?
I get the egg frittatas from Costco. These I got from Fresh Time.
Chat, do y'all eat breakfast before you trade? I'm pretty superstitious on stuff. I'm not gonna lie. So if I eat breakfast one day and it kind of works out, then I'm gonna eat breakfast every day until it doesn't work out, and then I'm gonna play around with it not working.
I mean, as a general principle, we all should probably be eating breakfast, but
So we don't eat our stomachs.
Yeah, you need that energy, power your brain.
My dad was a trader at the Board of Trade for 40 years, and he always came in the building on the same door, tried to use the same elevator up to his office, walked in the same door to the trading floor every day, wore the same shoes, and wore the same tie every day.
Same tie every day is aggressive. I like it.
Yeah, it was basically in tatters by the time he quit. By the time he retired. One of these days, I'll tell you about the tie. It was kind of funny. I didn't get it until I was a little bit older, but there was a message in the tie. See if I can find a picture of it. Well, here we are. Not really
every day, Daniel.
We do have a number 9.
What is that again?
Home sales. Existing home sales. It's marked as an important one on the calendars. So
they mark so many things important, though.
Yeah. It's
because they need them. You filter by 3 stars. Sometimes it'll be like, oh, the Aussie dollar parade. I don't know. I just made that one up, but I feel like there's only a handful that are really going to move it.
Yeah. We don't really have any talking Feds. I mean, ECB President Lagarde is speaking at 10 o'clock, I guess, today. So we'll see if he has anything to say. But, I think we'll probably a lot of hurry up and wait now for the FOMC meeting minutes and Nvidia at the end of the day.
Yep.
Yeah, I don't think you'd want to aggressively position before that NVIDIA thing in the NASDAQ. So Hoag
Might
short
make some
from 45, 48, 50.
Mhm.
Matt, you're still flat.
I haven't taken a single thing yet. Nope. Still flat. Crude's doing nothing. Nas is kind of doing nothing.
A whole lot of nothing.
Yep. I'm interested to see what happens with crude if we can pop 7760. So we had a lot of volume put in, bounced off 77s, 50 tick rotation up. We got yesterday's value area low at 7760. So we get back up inside that. It's a little bit interesting to me, but as long as we keep clean rejecting it, it's 50 tick rotations, in my opinion.
And you can make a lot of money if you play that right.
Right. Yeah. There are times a day where I enjoy playing rotations like that. And then certain like 10:30 to noon central, I don't mind playing rotations. If it's earlier than that, I get a little spooked playing rotations. I've just gotten burned too many times. In early morning volatility where like it appears that we are going to keep rotating or whatever. We keep getting volume flips, etc. And then it snaps. So I like doing it more during lunchtime where it's a little bit more,
when everybody else is at lunch.
Yeah, when it actually does kind of rotate just naturally.
So we've got about 2.5 minutes before this number comes out. Do I hold this or do I get rid of it? What am I doing with this position?
You should wait 15 seconds before, see if the book's thin out, and then rock and roll.
Tradertainment, Hoag.
Yeah. All right. Well, we'll leave it then.
I think if the books are super thin, then it's obvious to, clean it. But normally home sales books are just normal and we don't really have a crazy reaction.
Yeah, I'm just kind of watching the S&P dome here, and we're still well into the hundreds and 200s as far as bids and offers are concerned, with 2 minutes left.
Well, so far high of day is the 80 to 20 rotation, high and low of day.
Right?
Should have taken it. Classic. Little hindsight.
Yeah, that's always easy, isn't it?
Right.
Hindsight's 20/20.
I think with existing home sales too, it feels like the type of number that you could get a pretty good idea of what it is before it's announced, right? It's not the same as CPI or the employment numbers would be difficult, but existing home sales, I bet you get a pretty good idea if you have the data.
What do you think, Jack? Do you think it's lower?
Existing home sales? Well, I don't have the data, but
I think it's lower for sure.
With Zillow and Redfin and stuff out there, people have to have a good idea.
Right.
Is it Dome or Dom? Yeah, that's a good one. You say Dome or Dom?
Dome or Dom?
I always said Dome.
Yeah, I say Dome. Wait, I don't know. I think I say Dom.
We'll catch you later on when you're
It'll slip sometime.
Speaking freely.
I think home sales are down. There's actually a market that a mutual acquaintance started called Kalshi, Kalshi. They're regulated and everything, and they basically created like a true polling environment through trading. So you can bet on like interest rates. You can trade interest rates. It's like binary options essentially on like interest rates and home sales, any sort of like economic news. They had weather up there for a little bit. I think they still do. I haven't traded that in a while. Presidential elections, things like that. It's pretty interesting. They're going through like a pretty big court case right now on presidential elections because they think that they're basically claiming that polls are skewed, and so they want people to be able to trade their polls. But
okay,
pretty interesting on the on like home sales and stuff like that because people are actually like very smart out there, and so if you can kind of get in a direction with the trades out there, people are very you don't really get anything out of it, but you can get an idea of where the news is actually going to be gearing up.
So October came out lower. It was 3.95 million in September. They were looking for 3.9 million. It came out 3.79 million lower. As Matt suggested, it is true.
Indeed, it was. I got those number up now.
And the markets didn't really care.
No, not really, not much. Huh?
Yeah, it's not a really big miss.
Yeah. I just know in my area, at least, home sales have just taken a massive hit in Austin, and there's no signs of it being any better anytime soon. So I would imagine that number is red for a while.
Really? In Austin?
Yep.
I thought everybody was from California was moving to Austin.
Well, they were, and I guess they're not anymore. I don't know.
No, oh, I guess.
I think a lot of people are actually moving back. I've heard about a lot of people moving back. Nice. We just ran the lows on the NAS.
Oh, 1 second. Still short.
Yeah, still short.
Diamond hands, as they say.
Yeah.
Through that monster number.
I've never been known for my great foresight, but this is a trade.
I just, by the way, learned that I've been mispronouncing. Hey, Hoag, what's the big company that's giving earnings after the close today?
NVIDIA?
Yeah,
he said it right.
Matt, you say it. I want to see how I'm doing it wrong.
I say NVIDIA, but I know that's wrong.
Is it NVIDIA? Is that how you're supposed to say it? I don't want to sound like a jerk here.
I don't know.
Yeah, it's not NVIDIA. It's
NVIDIA.
Yeah.
Okay.
NVIDIA.
I'll keep that in mind. I'm still going to do it wrong.
Oh, God. I don't know. I'm the worst with pronunciations, and anybody who's from my channel who's watching, I don't know how to say idioms ever, and I am terrible with words in general. So I'm definitely the wrong person to ask.
I'm hearing NVIDIA. Okay. That's simple. You spelled it out so even an idiot like me can figure it out. N like the letter Vidia. Gotcha.
NVIDIA.
NVIDIA.
Brooksy's telling me to hold it. Others are saying get out.
Those are the two options.
Yeah. Right. Do we go for it on fourth down, or do we punt? Do we fish or cut bait?
How much in the money are you?
Flat.
Oh, flat? Oh, well. NAS is finally seeing some buyers here. We'll see if it steps up enough, but
And you're watching your
my little short term 22 range.
And that's the delta that you're looking at, seeing the buyers come in?
Yeah, and I kind of watch it with the pace of the DOM too. So it's like a little mini combo. I don't really know how to describe the pace of the DOM. It's really tough. You just kind of you watch it enough, you can kind of figure out the little 4 ticks up, 2 ticks down sort of movement that just kind of naturally happens.
So it's official. You call it a DOM.
Oh, there you go. Yeah, I guess so. I call it the DOM. Yeah.
DOM.
Didn't even notice I was talking about it.
Mm-hmm.
So yeah, that paired with Delta, you can just kind of see it. But
yeah, we were relatively deep into the Delta early in the S&Ps here. We've taken a lot of it off. I mean, we're only down 800 now. We were down like 2,300 something at some point. So we're seeing buyers coming in, but I don't know how successful they are.
Right. So I kind of want to see, for what I like trading, I'd want to see us go back down into low 80s, maybe even sweep the lows on the session, and for buyers to kind of stay, or Delta to stay where it's at right now would be interesting. And then potentially even to put some more volume in at whatever this is at 85 would be interesting for me to want to get long. The tilt is pretty flat. The only reason I'm even talking about longs right now is I know we have a generally downtrend from the overnight session through now.
Right.
But it feels very rotational to me still. So I don't know. With FOMC minutes later today, I'm are we really going to sell off all day? Maybe. Do I like to play back up into 16K? Yeah, I do. So you're looking at 10-point trades,
So that's a good thing. If I say the market's going to just range all day because of FOMC, it won't.
Right.
The market loves to make a liar out of me. So the market is going to range all day today. Certainly not going to go lower significantly.
Right.
All right, let's see if it works. Let's see if it works. Yeah, it is a holiday week. You know, we talked yesterday. You know, you got to expect a little bit lower participation, a little bit less liquidity, especially FOMC coming out later. I don't know. I'm starting to talk myself out of this trade, but I'm not any smarter than I was when I put it on. So we're gonna see what happens. We're really just kind of in this consolidation from yesterday, finding support at the single TPOs right down here. You know, if you're looking at profile, these are single TPOs. This you know, should be supportive. We had single TPOs here. We took out before we even opened. A little bit of a demand zone here.
Saying you could reverse, Hoag.
Yeah, no, I mean, the opening range is still the high of the day. We just took off about 2,000 in Delta, and we're still holding the opening range at the high of the day. I mean,
you got to hold it if for only entertainment values.
Yeah, I'm going to, number one, accept it as a loss already. Anything other than that will be a nice surprise.
You're what, risking 5 points or something?
Yeah.
Yeah. I say why not hold it? I mean, everything is down, right? So we're trending down still, technically.
Mm-hmm. You know, probably get whacked by the overnight inventory, but that might give us another better trade location for a short. But right now, that opening range is still the high, so I'm not looking for longs. I'm, you know.
Right. NAS Delta is good. I like the way the NAS looks for the top side push for a little bit more move higher. That being said, we're right at 16K psych level, big round number or whatever y'all call it.
Right.
Big ass number or whatever. And then at the overnight lows also. So it's like there's three things there that are kind of, you know,
the big fat round number.
Yep. Kind of slap worthy there, and volume. So volume, overnight lows, 16K. We rotate an instant 8 points off of it. It's gotta be faster to jump in on some of this stuff, unfortunately. I'd like to see a rotation back up to value area high on the session, probably 1610s. Could be an interesting short there for me. That would be where I would be comfortable. The 16K one is a little bit diddle in the middle for me.
Right.
So a bit more like 1610s to 1620s is more short worthy in my opinion for the kind of reverse.
15,999 is the point of control.
Right. I think it just flipped actually. It flipped down to 94s and a half. 95s.
Yep. Volume point of control. You are correct, sir.
Well, Hoag's still in the short. I think sometime soon, Matt. If always go back to trading if you want, but we should probably take a look at the F1 stuff at some point too. I got questions.
Yeah, we can. Did you say you have pictures?
I think that we do have some pictures. I don't know if they're of you. Got James working the box today of some of the celebrities and stuff. But overall, what was your impression?
Okay, so I really liked it. I'm a huge F1 nerd for the most part. I really liked it. I think that there was pros and cons like there is with anything in life. Here in Austin, so like if you go to like the Formula One race here in Austin, it's obviously a totally different track. The track is designed for it. I think a street race is so cool. Seeing all the cars flying down the strip was top notch cool factor. A lot of people like don't like it or whatever. I thought the race itself was one of the best races of the year, personally. Which again, kind of a hot take. The very first, there was also the other thing to note is that it's the first time they did it there, right? So like lots of learning experiences and things that won't happen next year that were bad this time. So like the very first night, when they're supposed to start their practices, a manhole came up out of the ground, like the lid, because these F1 cars create such insane suction downforce. It lifted a manhole up out of the ground that they hadn't welded or cemented into place, basically. And so that delayed practice by like 4 hours, so that they started their practice at like 2:30 in the morning.
That's crazy.
Yeah. So, but that was like the main real hiccup in my opinion. I also think from a viewing perspective, there are very good spots for viewing and very bad spots for viewing the race in person. I was in a bad spot, unfortunately, which there's no way to know until you're there that, you know, it's a sucky spot, basically. It was just too many people. They packed too many people into where we couldn't see the track.
That's interesting because like half the media, we're going to go through some photos here that James has gathered from it. It's like, there's John Hoagland, I believe. Yeah, I'm just going to go with John Hoagland there. That's Rod Stewart.
Yeah.
Hey, Deanna knows Rod Stewart.
Yeah, she
used to play. Yeah.
I saw Shaq. Yeah, I saw him at my seating area.
Everyone in a 5-mile radius saw Shaq.
Right.
Will I am, baby. Matt, I was saying the other day, I haven't laughed so hard at something as during the Miami Grand Prix where they had Will I Am conducting an orchestra at the beginning.
Right. Yeah. With like all the players walking out to it and you're like, what's happening right now?
That was the most Miami shit ever. We got Usain Bolt, fast man, fast cars.
Gordon Ramsay.
And there you go. That's the rundown from there.
Yeah. The leaving F1 was crazy. There was like insane winds in Las Vegas Sunday, and so there was 600 flights that got delayed.
Okay.
They couldn't like land planes because of how windy it was, and so there was like so many planes in a holding pattern or whatever that planes couldn't take off and leave. No one could land. They were down to like one runway. So that was kind of a little bit of a shit show getting home.
Hate it when that happens.
And there was like 900 private planes there as well, I'm sure.
Yeah, there's a lot.
It seems like half the people I saw posting were saying that it's empty, like this was a big disappointment, and then after like, no, it's packed. You said it was packed, right?
I said it was packed where I was. I think I was trying to like reflect on some of those comments because I was just trying to understand like where they're coming from. They must have been at like or casinos that were like way down on the tips of the strip or something. I stayed at the Bellagio, and the Bellagio was like mega packed.
Right in it.
Yeah, like it was super, super packed. I saw something that said there was 315,000 people that were at the race. So doesn't seem like a flop to me. That's a lot of people. But then, I saw a bunch of stuff on Twitter about like people complaining that no one was there. And I was like, I mean, the table minimums at the Bellagio where I was on Saturday night to play blackjack was $300 a hand.
Oh my God.
That seems about right.
Which is crazy. I've never seen it that high, like ever. Like, you get like to $100 a hand or whatever, but like it was $300 on the main floor, and then the high limit room was $1,000 and $3,000.
I mean, a huge event. Meanwhile, I just saw like someone tweet from the saddest tweet ever was like an Outback Steakhouse in one of the casinos that I guess had a view or something. They were expecting it to be packed and it wasn't. I'm like, what is going on here? Although,
right, yeah,
Outback
I
Steakhouse,
saw that same tweet.
Yeah, maybe not the best place to watch a race.
Yeah, I don't know. I think that it's a bunch of local people who are just pissed off about the construction, which is totally fair. Like, I mean, I think they were working on it for like 3 or 4 months on the strip before, but as someone who could just go in for the weekend and leave, it was freaking awesome, and would highly recommend going to anybody else, because it's Vegas is kind of like one of those deals where you don't really want to, spend a ton of time in Vegas. You get your 24, 48 hours of going hard, and then you can go home.
Right.
This kind of broke it up because you had something to do in between your gambling or your shows or whatever you're trying to do. So you kind of had like a big activity every night that allowed you to kind of stay longer, which is fun. We got a 300 block on the NAS at 80 flat, 333. This dude's been playing around like the last like 2 weeks. I feel like, I don't know if y'all noticed him sitting around.
Michael's been kind of peaked on that.
Yeah, this dude has been playing both ways for like weeks. Just constant 300 block, both ways. I've been kind of trying to pay a little bit more attention to him just to kind of figure out what's going on. But
And he's been right too.
yeah, that's the other interesting thing is normally I feel like when you see a big order like that, it just kind of runs through it. Either
Liquidity.
it gets, yeah, like and a lot of times it just gets pulled, to be honest. But this dude's, yeah, he pulled it. This dude's been actually getting filled on stuff, which has been fascinating.
Yeah, it'd be interesting to know what the strategy is there. It's, putting a 300 lot there is a choice.
Hopefully,
Right, and a 300 lot that you can see is a choice.
That's what I mean, that you can see it. That's what I meant. I mean, like trading 300 lots is a lot of size, but it's also, there's other ways to do it.
Hopefully it's not a fat finger.
Well, he's back. Like he pulled it, they swept 80, and now he's back at it. Kind of spooky.
You think it's maybe some sort of a...
You never know. They can be
Just a
spreading
spoof?
things.
Okay, so he just got filled out. No, he got fully filled there.
Ooh.
He's fully filled. I would say normally I would say yes, it is kind of spoofy, but like, and that was that first time,
he got filled.
but he got actually filled out. So
Wild.
That extended the range.
swept new lows. At least it's interesting. Like movement is good. Take movement. And now we're kind of trying to sneak back into the range.
If you can iceberg it, why would you show it? Well,
Right. That's what I'm wondering.
Because it's all a game. What I mean by that is that we noticed it, and I would presume that somebody doing that is probably pretty savvy, that they have some reason to believe that that's the right way to do it based on data, what they're trying to do. They could also, like, when I was trading, I wasn't trading outrights like this, but we were trading basis spreads, and it would look like the same thing. We don't know what that person's trying to do. They could be trying to hedge some options trade. They could be trying to hedge against some other product. You don't know. And yeah, Koga, I think I'm going to get a trading combine set up for tomorrow for myself, so that
that'll be cool.
Eddie's out. Someone asked if I trade. Yes, the type of trading I did was very different than this, though. I've never really been an outright futures traders. I traded treasury spreads professionally for about 7 years, and now I do a little bit of stuff with options and stuff. But I'd be interested to learn more about futures, which I have just from watching Hoag do his thing.
Do you trade zero dated options, or are you?
No.
Yeah. Okay.
No, I
didn't know how aggressive you were.
Well, I used to be pretty aggressive. Like, the truth is, I kind of burnt out on. By the time that I was leaving the company I was at, because I was at a pretty large company, and it was just miserable in the last year, and I just really didn't want to, like, the idea of trading seemed so viscerally toxic to me at that point that I didn't want to do anything.
Right.
So I'll do some stuff with options, but it's usually medium term plays. I'm not doing anything like at the end there, because if I was going to trade zero date options, I would trade futures instead.
Yeah. I track zero dated options. I track large orders that come through on it, but
a lot of folks do.
Yeah.
I mean, it's important. Large orders are going to have to hedge it.
Right. That's basically why.
I need to learn more about that.
I have a resting order here. I don't know if I'm going to get filled or not. I have an order at 77.5. I think I probably do get filled off this new open. I hope.
And I'm sitting here just dead even.
Still just chopping around for you.
Yeah, it's not doing anything. It's just kind of hanging around here. So we'll see what happens.
I might have missed my order by a 1.5. Let's see if it comes back down. What level of 300 block got filled? It got filled at 80 flat. To James in the chat.
Shaw, you're right. Anne Marie looks a lot at options, and we had
We're gonna have her on soon to do futures and options.
yes, we had Thomas Becker on yesterday, who looks at the sites, that tell you where the active options strikes are. OpenBB, I think, Cheddar Flow, Bar Chart, Unusual Whales. Those are all sites that do that. But I need to learn more about it before I can actually use it.
Wow, we're sweeping through it. Yeah, I use one called Rigged AI. I also use one called Rocket Scooter. Rocket Scooter shows more long-term dealer hedging, and then Rigged AI is zero dated large block orders.
Rigged AI, like RIGGED.
RIGD.ai, yeah. I took a 15-point loss there. Got swept.
Okay.
So like at 9/11, what happened at 9/11 on this? Yes. Anything interesting?
(9/11) like the Porsche.
Right. Time of day. Anything happened 10 minutes ago on the S&P?
No, I mean, yeah. The number came out at 9. There were a couple of kind of good push sweeps to the downside at one point. I'm not sure about the time.
So like we just got a fat 0-day sweep. All right, on the candle that I got stopped out on literally a minute ago. And so like that the 240 to the 388 put is up 25% instantly on that 0-dated option.
Oof.
It's just crazy. So like that alert comes out and it's just like that type of stuff is very interesting to me. And then the dealer hedging one that I use is like basically showing that it's a down day. Nothing too crazy there. Pretty obvious that it's so far getting swept. I was giving one last try for playing back into the range, but I don't think it's going to happen. A bunch of sellers came out.
It's amazing, Hoag, that you're still in that position from the opening minute, and it just really has not moved too much one way or the other.
No.
Little in the money, though.
Yeah, a little bit. At least we extended the range to the downside. I mean, A high is above B high, B low is below A low, almost a beginning of some possible one-time framing, which is continuation of the overnight session. So
we're 10 points away off from the that NAS level that we were talking about, 945s, 940s. So that'll be kind of interesting sooner.
Wouldn't you be looking for the 920s?
Yeah, I mean, 920s is where I would probably say yes, but the problem is that we have yesterday's value area low at 940. Okay. And then we have the overnight or Friday's high right around there as well. So we sweep that, then yeah, you're looking for the 920s.
Right. Okay. Yeah, we've got a lot of space down below. I mean, before we get to the overall value low from yesterday in the S&Ps, I mean, we're looking at 45.34.
Right.
And that's the TPO low. But when there's a double distribution or several distributions, I kind of address different value areas for each. The one thing that I am liking about, where we went down to here is we took out these single TPOs. So if we can accept in this, that brings us acceptance of price in this distribution of time and volume down to the value area low.
There's the 40s.
Best laid plans of mice and men often go astray.
Crude oil still doing nothing.
What's your target,
is
Hoag?
back in the 40s.
Jack, what'd you say?
What's your target?
I would like to say 30, 43, 30. I'm sorry, 50, 45, 35. Oh my gosh, my
Is your lawn furniture
dyslexia
flying
is
again?
coming out.
Okay.
Pardon?
So that's if your lawn furniture was flying around again.
No, there we go. All right, I put an order in. We'll put a little seed down there and we'll see if it goes and gets it.
Nice way of looking at it.
Yeah, my dad used to do that. He called them wishing orders.
I call them act of God orders.
Yeah.
It's like, all right.
There you go. You'd say, yeah, you got a wishing order down way lower in the soybeans. Let's see if we get it today. Sometimes you do.
So looks like we got the DOJ announcing. I'm trying to find that comment here they left. I'm looking up right now. Department of Justice to announce major cryptocurrency enforcement actions today at 3 Eastern. So that's 2 Central.
They were coming after Kraken yesterday, Kraken Exchange. So I wonder if it has to do with that.
Well, I did read that the U.S. is seeking over $4 billion from Binance, the world's largest crypto exchange, to end a criminal probe.
Yeah, I saw that.
You buy yourself out of that shit, you know.
All right. And I think $4 billion is kind of chump change for those guys. So they probably will just say, yes, please.
It's like guys got in trouble with the exchange and they'd make $3 million and their fine from the exchange would be $200,000.
Right. I mean, that's like, there's spoofing fines all the time that we see come through where it's like, they get a little $20 million fine for spoofing or whatever. And you're like, those guys must have made hundreds of millions of dollars.
Right.
There was one big one recently. I think it was JP Morgan spoofing settlement. It was on precious metals.
Yes, it was. And there's some great, I feel like, messages from that trial.
Yeah. Do you remember any of the details on it? I don't really remember too much. I just remember it was on like prolific, like massive spoofing with like.
I think they were spoofing to, as I recall, give favorable prices to certain like derivatives products that they were selling or trading. I'd have to look into it. That's one of them. If that's not the JP Morgan one, it's someone else.
Yeah, and I think they got like $100 million slap on the wrist or something like along those lines. But like they must have made ungodly amounts of money off of that, right?
One would think. Do you dabble in the cryptocurrency world, Matt?
Yeah, I do. Oh, wait, it was they agreed. Sorry, excuse me.
Go for it.
September 2020, JP Morgan agrees to pay $920 million in a spoofing precious metals and treasury markets. $920 million. That's crazy. Yes, I do dabble in crypto. Some of my biggest trades of all time are crypto for me.
Crypto?
Yeah.
I don't trust it. I don't get it. If I don't know enough about it, I'm not going to do it.
Yeah, that's all very valid and fair. And then Bitcoin on the CMA is just not, there's just not enough going on with it.
Yeah. And maybe it's because of my age, I'm very distrustful of new stuff like that.
All right.
Somebody asked what spoofing is. So when you place an order on exchange, you're supposed to place something that you want to be filled on, right? You're not supposed to go in there and manipulate the market by putting in huge orders to pull them milliseconds before, move things around that way. Anyone, Hoag, do you have anything to add on spoofing?
Yeah, I mean they do it. It happens a lot. I mean, they do it all the time. It's to manipulate the shorter time frame traders to acting in a certain way.
Like, think about that 300 block. That 300 block guy that we've all been watching, right? We're all paying attention because there's a fat order on the books. And so we're all trying to figure out, is he going to buy? Is he going to sell? Should I front run him? Should I not? And if he pulls his order and we get filled on something, then it's like, it was all for nothing. And that's spoofing. He's getting priced to move in a direction without having to execute.
I just took my profit on that 450. It's 2-to-1 reward over risk. So I'm happy with that. Now watch it go.
Right. That would be classic.
But
Dude, that's fine for one lot.
It's a good trade in a long time. 2-to-1 reward over risk. I'm happy with that. So back to spoofing. Guys in the pit used to do it all the time. They would offer a 100 lot just to try and push price in a particular direction. They'd offer 100 lot, try and move the offer down, and then they would sell a 1 lot on a low tick. And they call that painting the tape.
Okay.
So you would be able to kind of down tick the market with one contract, and that would go across the tape and out to the whole world to make the market look like it's weaker than it might actually be. So, when we have people showing big orders in the dome, they're really supposed to leave it in there for an amount of time before they can pull it. That amount of time has been in question for years. And how do you know? I mean, how does the exchange know if you put an order in to sell 500 in the S&Ps that you don't actually want it, but change your mind 2 seconds later?
Right.
So
Because the conditions change all the time, right? So
yeah, I mean, it's very difficult to prove it, but they are getting better and better at it because they can see what you do on the other side, right? You put a 500 lot in, the market breaks, you buy a whole bunch, and then you pull your offer. But it has to happen. It has to happen really quickly.
So like you see like these big banks get slapped with spoofing fines all the time once you start paying attention to it. Famous, like super famous one, if you want to read a good book, is about Nav, N-A-V. I think his last name is like Sav something, or I don't remember. But Nav is a guy out of Japan who probably the most famous spoofing case of a retail trader. Guy made millions and millions and millions of dollars spoofing the markets back in the day when computer trading was first introduced. Worth a read. It's called Flash Crash. Actually, the only trading book I've ever read. And it's
really?
Not even a helpful book. It's just an interesting story called Flash Crash.
Huh. So it's like a kind of a biography of that.
Yeah.
Of that situation. Huh.
Yeah.
You've read like trading instruction books, right?
No, I've literally never read a book. Well, I've read a book, but I've never read a trading book.
Broad statement.
Wow, that's interesting.
Yeah, I mean, so one of these days, I'm gonna suck it up and read Trading in the Zone because that's what everybody talks about. But
it's a very good book.
Yeah, I don't know. I really struggle to. I mean, I'm gonna sound like an idiot here, but I really struggle to read.
So do I.
So,
but you can get them on audiobooks now.
Yeah, that's a good point.
But here's his other book, the Disciplined Trader.
Yeah, is it good?
I actually like this one better than Trading in the Zone. But that's me. It takes me forever to read.
Yeah, no, it takes me a very, very long time. We're sitting at the 20s right now, so we made the 80 to 20 rotation very quickly, very, very quickly. 10 minutes. So now we kind of see if we're gonna continue lower or hold the line.
Where's value? We took out the low of value in the NASDAQ.
Yeah.
The plot thickens.
Eggs come from chickens.
Books. Where and how did you accumulate your knowledge? Just time on screen, man. Sorry, answering your question for Grog. I was just reading the YouTube chat real quick. He said, if you don't read trading books, how'd you accumulate your knowledge? Talking with people. So having trading buddies we're all kind of, throwing ideas around with. Time on screen. Your brain is you're very smart humans, and your brain can pick up on patterns very quickly. And then once you kind of figure out something, be a learner and go down the rabbit hole. Like I spent tons of time on Google, right? Once you find a concept, go research it, feel like try and understand it, watch the screens on it, and then let your brain, you read one article talking about one thing that you're researching, but then they mention something else. Go run down that rabbit hole. That's how I get most of my knowledge. And then asking people like, to explain stuff, you find Discord. There's so many free communities out there, and you got to sift through a bunch of BS, to be honest, through a lot of them. But there's always little bits of nuggets. And then you can find people pretty much wherever you go that will be like-minded individuals who you want to learn from, and you can, iron sharpens iron, right? So even from a learning environment, like you're with a bunch of people who are all trying to actively learn and get better, you're going to all get different pieces of information and then combine it together. That's what happened with me.
So Matt,
the key is actively.
Yes, exactly. Yeah.
See some questions about the 80-20 rotation. You care to explain for the audience what that is?
Yeah, I don't really have. We need to come up with a name for it. But I just have noticed over the last, I don't know, years, 4 or 5 years, me and my stream noticed that like the market, specifically the NASDAQ, because that's what we noticed it on, likes to rotate and consolidate 80-20. So like you saw right off the open, we flushed immediately to 80, and then we pumped immediately to 20, and then we rotated back down to 80, and then we consolidated 80, and then we snapped lower to the 20s, and now we're consolidating the 20s. And so now it's like, if we're going to break lower, I'd be looking at 880, and if we're going to break higher, I probably wouldn't be looking for the full 980 rotation, but it's just kind of points of interest. I wouldn't necessarily, it wouldn't be something I'm taking a trade off of, but if there's enough other stuff, it's a point of confluence, in my opinion. Something interesting to keep an eye out on, as you're looking at your own charts. Just start. This is a great example of what we were just talking about. How do you learn stuff? Like now you're learning about the 80-20 or whatever I'm talking about with 80-20. So now open up your charts and go pay attention to it over the next couple of weeks and see what happens with it. Maybe
and look left too. See how often it happens in the past.
Right.
And that's what Matt is talking about, is actively paying attention. You can stare at charts for 10,000 hours and learn nothing.
That's a good point.
You've got to be paying attention, accountable, noticing things. You've got to be an active watcher, an active learner if you're going to do it.
Yeah. I think a good thought process too, because a lot of people talk about like watching the DOM. Like you got to watch the DOM in order to figure out like how quote unquote order flow is or whatever. And it's like, watching the DOM itself is not going to help you, but if you can kind of learn to think in if-thens, right? Like if this is happening, then I expect this to happen. And if this doesn't happen, then I kind of expect this to happen. That whole concept in trading is very applicable, but like in however you're watching the screens, just think about it in if-then statements. Like if you're not actively trading, but you are trying to learn and kind of watch price action and figure out what's going on, just kind of map out in your brain, like, okay, so like if we snap 20, then I expect 80 to rotate, think about it like that. And it kind of creates that active learning style that John's talking about with, and be a learner, be able to be wrong, but kind of helps, in my opinion. Just kind of a 2 cents little thing.
No, that's sure. I mean, that's great stuff. And nothing works every time. Right. Like Matt says, I mean, if you've got an expected behavior and it doesn't happen, what's the next expected behavior? And does that happen?
Right. So like right now we're sitting on initial balance, right? Initial balance low, IB low. Mm-hmm. So it's like, if I expect IB low to hold, then I would actually expect a rotation back up, probably to the midpoint, which is at 70s, which to me would then be, I might expect a rotation back up to 80s because I find the market typically rotates 20 to 80. Would be kind of like one of the ways that I would think about that. If IB low does not hold, if we kind of snap and break and close below IB, and we have a little move to the downside, maybe 900s or 910s, and then we come back up, retest the 22 level, IB low, and we hold it, then I would expect a rotation down into 880s. That would be kind of like that thought process that I'm talking about, where I'm kind of trying to map out a few different routes and see kind of how it works. If I'm not, taking the trades, or if I am taking the trades, same concept, I guess. And just to kind of see, like, okay, am I getting is this the type of price action I should be expecting on a day like this? Then you could even like throw in the VIX. Like, what's the VIX at right now?
Right.
So if the VIX is at a 17 or at 20 or at 15, what is the VIX right now? VIX is at 13.6. So
or if it's trending one way or another.
Yeah. If it's up a percentage point, right? If the VIX is up a percentage point, what do I expect to be happening with price action if it's at a level that I care about? Things like that, where it's like, okay, that's how you can very aggressively learn very quickly if you're kind of able to open your brain up to consuming.
There's a lot to consume.
There's a lot to consume. There's an endless amount to consume.
100%. Yeah.
Analysis paralysis in some capacity.
Yeah. Yeah. I mean, it does happen. And usually if I get into analysis, paralysis by analysis, I'll go play golf for a couple of days. I'll do something else, just get my mind off it. And then I feel a lot more clear when I come back. I'm not all stuffed up with all that information. It's had a chance to digest.
Yeah.
And then we can move on. It's so important to take a little bit of time away.
I agree. I've gotten to a point where I'm kind of at like, does this 300 guy back? Like 300 guys back at 20 flat now. So he was there. 300 guy was there at 80 flat and got filled at 80 flat. And now
he's at 20 flat. Unbelievable.
20 flat. So like, I mean, back to the 80-20s. I don't know what, maybe this guy's watching the stream. If you're watching the stream, just go ahead and move that block around a little bit, but but like, it's just fascinating. Why is he getting filled at 80 flat and 20 flat, or why does he have resting stuff at 80-20? I don't know, but
he's been watching you.
Right. He's watching TopstepTV right now. I agree with you about taking time off though. I've learned that I perform significantly better if I take a few days every quarter of no screen time. And my brain now, if it's getting to that point where it's like 3-4 months in and I'm still aggressively on the screen every day, I start to perform worse. And my brain is like, you need to sit back.
You turn into mush.
Yeah.
I was thinking that when you were talking about, everybody says, look at the dome, look at the dome. If I look at the dome, I'll be exhausted within 30 minutes.
Yeah.
It's tough.
The only time I look at it is potential breakouts.
Yeah.
Whether it's an IB breakout or a longer time frame breakout, I'm going to be looking at the dome to make sure that everybody actually cares that it's happening.
Right. I care more about, I agree with that. I care more about the dom at extremes. So at highs or lows or swing highs or swing lows, so I can see if there is some form of accumulation or continuation. Like,
right. You just, it breaks out and the dome dies. I'm like, nobody cares. This isn't going anywhere.
Right. The other thing that I mostly watch in the dom, which I can see on my 1 minute chart, is really just like, where are resting orders, like above average resting orders? I call them magnets. So like right now we have 36 sitting at 39. That's above average for both ways. So I would kind of anticipate us to kind of rotate up to 39.
Goes to the liquidity.
Often. Yeah. I watch that very often, kind of constantly, but I have different ways of looking at it now, whether it's on the 1 minute chart or if I'm actually looking at the dom.
The market always seems to go to the liquidity where the most trading can occur.
Right. Well, that's the whole point of the market, right?
Facilitate trade.
Facilitate trades.
Facilitate trade.
So 20 just sitting there is kind of interesting. The 20 guy, 300.20, makes me a little curious in this 44 level. 44 to 50.
Why that level? My dog is barking. I apologize.
Oh, yeah, no, you're good. I mean, even value area low here. Basically anything from here, value area low to the 40s. I kind of want to see this little wick that got run at 40. I kind of want to see us run that 40 level. And then we have I think an order block is probably the right term here for all you ICT boys out there. I don't really know, but a 1 minute chart. Whenever I see a sea of red candles on a 1 minute chart, or even a 5 minute chart, if I see a sea of red candles, I look for the one green candle in the middle, and it typically is a nice little reversal spot. Again, I don't know the right terminology on most everything that I talk about, but just something that I noticed. Like if you have 5, 6, 7, 8, 9 red candles in a row, there's typically going to be one green one where we kind of consolidated for a half second.
Right.
and that's going to be the one that we rotate off of a lot of times.
So you got to name these, man. You get such.
I
good
think that
names
one
for
is
this
named by ICT. I think it is called an order block. The chat will probably be all over me on this one. I think it is an order block. But definitely something that I like to watch for. And I mean, we're kind of rotating it right now. We've got to 43s.
Mm-hmm. Your 20 level down there was
Money,
right?
It just, I didn't see enough buyers down there for me to want to
participate.
Yeah, just a little sketch after getting slapped fairly hard. I mean, that was a 60-point rotation pretty quickly. Not something I really want to step in front of a whole lot.
As a reminder, we have Fed minutes at 1, and then we have NVIDIA earnings after the bell today.
NVIDIA.
Oh, yeah, I think you're looking at in the ES right now.
Yeah. Here it is. So, okay. Accumulation of time and volume. Excess. This offers us the opportunity to limit risk for another short.
Going back to the well. Love it.
Right. The one thing that I don't like about it is we're in a kind of a repair mode. What repair is when we open between two kind of high volume nodes or volume areas in the previous day, the market has a tendency to trade to an assumed point of control in the lower distribution and an assumed point of control in the upper distribution. We know yesterday the points of control, here's the TPO point of control, here's the volume point of control. We've repaired here to here. My question is, now are we going to repair back up to here? We take out these single TPOs, and that makes this a rotational day. So not going to be taking this short, even though look how cheap it is. I mean, you could risk really 2 points, but I'm mush right now.
Yeah,
I don't want to take it because of that reason. Repair is likely. So what's repair? I mean, we left all this up here. Well, we took that out. Overnight, we took out this low volume area here, but we haven't really taken it out in the regular trading hour session. Now, I don't want to go long because our opening range is still the high of the session. And I don't really want to go short because we've repaired down to here and we may repair back up to here. This may be it for us. I mean, we may just kind of hang in here till our FOMC meeting comes out, till the minutes come out. But, we close these single TPOs. This turns into a rotational range-bound type of day. And, I might look at a short up here. I might look at a long down here. If they offer cheap opportunities, I can take them. But right now, I'm going to just sit here and bask in the glow of my nice, tidy little profit.
Is that how you normally do it, Hoag? So you won't take, you do the opening range trade, for instance, and then if that remains the high or low, you try and steer clear of doing anything?
Opposite trades, right?
Yeah.
But, yesterday was a prime example of I was able to find an opposite trade. So, the market opened, left the opening range at the dead ass low, which isn't an industry term. We opened here, I shorted here and covered it here. So I made money on the short side on an up day yesterday. I didn't really participate the rest of the day because I've been a non-believer of this rally. What is this?
Why it's
I'm
45,
sure
58.
45s, 45.75.
Okay.
I took it. Will be a scalp. I would like to see a rotation back to IBL, but I don't know if that's going to happen. So I'm going to be pretty nimble nimble on it.
Oh, hello. Jeez. Okay. So I'm with you on that. I mean, I like the trade. You're short, right?
Yeah, I'm short. Yeah.
So on the profiles, volume, accumulation, volume, accumulation, no volume, very little participation. So this is kind of similar to the opportunity that we were looking at in the S&Ps. Well, I mean, considerably more risk if we're going to close out these TPOs, but you know, the market has already kind of rejected the repair area from the NASDAQ up here. There was no repair area down here. We traded to this. Now, you know, we're possibly accepting below value. I mean, I like the short. The risk is a little bit iffy, but I like it.
Yeah, for me, it's we got to crack 36 here, and if we don't, I'll be out, just straight up. So, but I'm looking at 28s ish for me, just kind of middle of the range going into IBL. Would be a money style trade that I would like to see. But again, who knows? I'm up 8 points, something like that.
Nice. Those are, you know, we talk about that a lot. I mean, we call them volume shoulders, right? Markets has accumulated some time and volume here. Well, I mean, you get to the shoulder up here. This is your entry. You know, you get to the next high volume node. That's your risk. You can take that rotation all the way to the low or beyond. I mean,
right.
You got the volume shoulder down here. We didn't really bring in any volume below the initial balance.
So yeah, I'm not interested in us really flipping the screen on the 5-minute candle.
What do you mean flipping the screen?
So like whenever we we'll go down and test so over here on my left chart, whenever we go down and test the prior open of the candle and we get a bounce out of it, if we flip the candle green, it's typically gonna boost.
Keep going. Hard.
Yeah.
Understood.
So I like watching the prior opens of the of the candle before. I don't really know how to describe that, but so the prior open here would be that 36 level that I was talking about. So we got below 36, but we didn't really sweep it super hard. And so us holding above 36 to me is a sign of weakness on the short. That being said, kind of swept it a little bit right afterwards, right when we got back out of it, or right back into the 36 range. So if we flipped this candle green though, I would 100% be out.
So that's your risk. Right. Very limited risk.
Right.
Very nice.
It's actually, I'm going to go ahead and put a break even stop in here because we've already swept it once, right? So if we go back up and sweep this candle, that's not good.
Then you're out.
Yeah.
All right.
If we did sweep it once, then I would kind of hope for a close below 36 on this candle. So in the next minute, I want to see us close below 36. And if we don't, I'll just take
below the
7 points.
Opening of the previous bar.
Yeah.
Got it.
Yeah.
Awesome. See, ladies and gentlemen, this is what you got to do, man. You got to think through the trades. You got to have a reason. You got to have logic. Even if the logic is flawed, at least you got an idea of where your risk is and what you're thinking the outcome might be. And we certainly can't name the outcome, but we can certainly give ourselves the opportunity to look for opportunities like Matt just did. Limited risk.
Yep.
Talk yourself through these trades, right?
So for me on this trade, it's above 52. This trade is no good. When I first got into it, because again, watching for that kind of the sea of red, look for that one green. Above 52 on that green candle is I'm not interested anymore. But I got in at 45, right? So giving myself 7 points. It took 3 points of downside before making its kind of move lower. It stopped right at that 30,
of course,
39, right? Classic.
Of course.
And I'm fine with kind of where I'm at right now. So I want to give it a second just to kind of let it breathe and see.
And you don't have risk.
Yeah, my trade is off exactly. So there's no real reason for me not to. I mean, they're going to be like the trade never happened, or I'm going to make money. So
Right.
that being said, we're just kind of hanging out at yesterday's value area low, which is I don't hate it on the long side, I'll be honest.
Right.
Consolidating yesterday's value area low is not a terrible thing with Delta kind of holding up right now.
Sure. All right. We have a poll we want to ask everybody, and you guys are always really good at answering these polls and being honest with it. The question is, has your strategy improved since watching Topstep TV? Has your strategy improved since watching Topstep TV? We'll put a poll in here shortly, and let's see what we've got on this. We're hoping so. I mean, that's really our goal here, is to see everybody improving and getting as many people making money as we can. So let us know. Be honest. Be honest. We've got a lot of folks watching today. I'm not usually the guy that asks this, but what's with the likes? Hit the lucky like button. Let us know you're here. Let us know you love us.
The channel says 690 thumbs up. Click it. Get to 1,000.
Those thumbs up feed my family, one by one.
Someone asked for me to explain the wick test. I will explain the wick test if I see a wick test. It's really hard to explain without a good example. I mean, the daily charts. Well, not even the daily. Yeah, if I see one, I will explain it to whoever asked that. I just lost a comment, but that'll be fun to talk about when we see a good one.
So that's another name, the wick test.
Yeah, that's one of my favorite trades. Just straight up, it's very good, clean, defined risk. It's usually an immediate reaction, and it's good for a scalp.
I can't wait to see this. Let's get a wick test going here, guys.
I know. Yeah, we need one. It'll be usually I like it on the 5-minute chart, so we'll watch and see if we can get one on the 5-minute chart, but don't see one yet. Looks like I might get filled out here. It's close, very close. Don't want to be a dick for a tick, which
10% rule.
Yep, they're close.
See people coming in asking where Michael is again. Once again, Michael is at Legoland, the Legoest on Earth.
He's big into Legos. You should see some of the things he's made.
He's not with the family. He's just there by himself, stacking blocks.
Right.
It's his me time. You know, you need to decompress. He goes to Legoland by himself.
So we got 760 votes so far. Let's see if we can get 1,000 answers before we check it out.
Someone too is asking about the 10% rule for Hoag. That's if you have a 10% of it. You take that off and claim a full profit target.
A full profit target. I was a little shy of my 10% rule when I got out of my short, but so far I'm glad I did.
Yeah, you covered somewhere in the 30s, right?
Yeah.
I'm going to be getting out here, most likely. 5 points, $100. I should have listened to you immediately on killed at the. I was a point away, 1.25 points, I think, away from getting killed at the bottom, and it just chucked on without me. And I thought for a second, maybe, but no.
Hence the reason for the 10% rule.
I know. I would have enjoyed those extra 10 points that I would have gotten out of it, but 5 points I will take, $100. Yeah. For 0 effort and 3 points of actual downside, it's fine with me.
A plus is a plus.
Life goes on.
And then, we pumped right back up to that level. So I would have gotten stopped out either way. So on to the next.
Okay, so the S&Ps, we've taken out those single TPOs. The TPO point of control is right in the middle of the range. It's really lining up to be a range bound day. I'm glad I'm out of that short. I'm going to stay patient and focus on the extremes. NASDAQ has come off a little bit stronger than the S&Ps. I mean,
yeah, I agree with that statement.
There's two distributions of time and volume that have been created where the S&Ps are more range bound. NASDAQ, not so much.
So like on my the 22 range chart's looking pretty solid here. In my opinion, for longs as of right now. I like the way that we're consolidating value area low. Deltas has looked good since the 20 test. Even there, we got what? We tipped into the 20s. We got 29 and a half without a whole lot of sellers on that little push to the downside. Buyers stepped up immediately. Like this looks pretty solid to crack 50 in my opinion.
So we got the results of that poll. 69% have said yes. Watching
Nice.
TopstepTV has improved your strategy. 30% said no. 30% that said no. What can we do better? I'm kind of wondering, and you can always send us feedback.
I think they're just here for the vibes.
For the vibes. There you go.
There's a wick test on the 5-minute chart on the ES. Okay, let me pull it up that we can
All right, I got to see this.
talk about the wick test. I got to find my ES chart.
You gotta.
It's been a while since I pulled up the ES.
The right contract. Let's.
Oh, I don't. I probably don't have the right contract on, honestly.
Well, this looks promising.
Show rollover.
Yeah, you're on D's. You're good.
Okay. Oh, this is why. Let me change my. It's been so long. I haven't even traded it on this account. Trade.
Hi there. I expanded the screen so I can see his charts, and I just look back and there's big us.
Oh yeah, I have to this.
Oh my goodness.
Yes.
So in the S&Ps, if we're going to execute anything here, we are definitely diddling in the middle. Look at this. NASDAQ's a whole different story. It's so funny how they're so different. Middle of the range bound probably activity. My focus is up here, and my other focus is down here. Anywhere in the middle, not interested. NASDAQ got that long line of single TPOs. NASDAQ is weaker. Delta is negative 2,800 in the day session alone, Matt, in the NASDAQ. That's pretty deep delta. When you get a chance, I'm wondering if you'll see any kind of divergence down here.
On the NAS or the S&P?
NASDAQ. But go ahead. I want to see
Well, I got to figure out
the wick test here.
Here's the thing, guys. I'm about to sound like an idiot, and that's okay.
Here's the thing. Always
Here's
love
the
that.
thing. Yeah. I use Sierra Chart, and Sierra Chart is extremely complicated. And one of my moderators has given me my Sierra Chart customized on a silver platter. And I love him for that. But when it comes time to actually like change something in here, it gets dicey very quickly. So like, again, I haven't looked at the ES in so long. About to just have to message him to get him to change my symbols, because I'm on the I'm not on CME ES symbols. I'm on Denali ES.
If there's something that I can do, here's the 5-minute chart.
Okay, yeah, we'll just look at it on yours.
Yeah.
Okay, so it's not a very good wick test, but it is a wick test. Here, one second. He just messaged me. Edit tab, translate symbols. Oh my god, I was so close. I was so close. I tried everything but that. Dang it. Oh, there it is. Okay.
There's so many platforms. Nobody's an expert on all of them.
Yeah, except this guy. Shout out to Gary.
You need that guy. We have a guy like that here, Robert. Robert's our
Coach Robert.
expert.
Okay, everything's just getting caught up real quick. I love Sierra chart, but it is a absolute. It's amazing once it's set up, and it is such a beast.
To set up.
Yeah, and to change anything on it is crazy, and like their support is like notorious for being
snippy.
Yes, extremely snippy in their forums. They'll straight up just call you stupid.
Well, that's helpful. That's another reason, Topstep, we have excellent customer service, excellent trader service here.
They will not call you stupid without cause. No, just cause.
It's just loading all the data for this contract real quick.
And so I always feel like, when that's happening, I should like juggle or something to just kind of keep myself entertained. And
yeah, I just go back to floating through space.
If I could juggle, that would be kind of cool, but no, I can't juggle. What is your hat?
69% long on the tilt, which is kind of interesting. Hasn't been that high since the open.
What's your hat?
My hat is Snake River Farms, American Wagyu. Wagyu? That's
Wagyu beef.
Yeah. Snake River Farms is sick.
He's a friend of mine on the trading floor. He was from Hawaii. He got a degree in tropical agriculture. Guess what he's growing? But he moved to Chicago and he was a broker in the S&P pit, and his badge was SRF, surf, because he was from Hawaii. He was a big surfer.
Yeah. Yeah, this is just it's like cool. You can get their steak shipped to your door and they come frozen, but like most like really nice steakhouses will have a Snake River Farm steak or something. They're out of Idaho, I think. Very tasty ribeyes if you like a ribeye.
Who doesn't like a ribeye?
And you pay for it, but they are worth it if you can grill. Okay, I don't really see a good wick test here, to be honest. That was a lot of work for a whole lot of not the best, but
that was good. That's good stuff.
Here we go. So basically the wick test is when you have a candle that has we'll use this as an example, this big red candle here. Let me pull it over so you can see better on the normal people. Okay. So you have the big red candle, right? The prior candle had a little wick here at 47. Right? And so a 47 wick, a nice move up, and then I call it an impulse move down. So like a really strong, very strong candle, right? You closed, like you didn't close in the middle to where you have a lot of downside wick. It's like the candle was super strong. We closed heavy.
At the low.
At the lows, exactly. On the next candle, what I would like to see is a push back up to test this prior wick. And then put an order there or front run it by a tick or something. And then a lot of times it will flush immediately. And so the risk is very tight. You can either have the risk be on a brand new candle or just give it like a point or two. So like if we break the highs, you're out, or you give it a couple points if you want to be a little bit more aggressive. You're targeting the prior wick and you're looking for a move to the downside. And it works both ways. So like if we had a downside candle, let's see if we can find one.
Always look left.
Right.
No, left.
So like this would work. Yeah, this is a very tiny one, but for the sake of the example, we'll use it. So you have this candle right here, right? You have a topside wick, you have a downside wick. Next candle opens up. This is on the overnight session, so it looks like it wasn't crazy. But strong close, very strong candle, right? Next candle opens, you test the prior wick, and this one front ran it by a tick. So you go back down for a tick. Looks like there were some other wicks here, and then it pushes out of it. That's the wick test for me. It's very simple.
Very cool.
It's very simple. It takes not a lot of effort to like understand the concepts. It's very easy to identify.
Sure.
The rules are simple. You have entry at the prior wick, stop at either a low, like you sweep the lows of the candle, or even tighter than that, and then you look for either like your average true range for the candles movement recently, or something that makes sense. And then typically you don't want a whole lot. If it tests it twice, it's invalidated. So it's only the first test of the wick, first test of the test.
Okay.
And it's only the candle right next to it. So you might see wick tests where it's like, oh, it's going to test it finally, and it's like 5 candles later. That to me does not count. It has to be the very next
part
after the strong close. Yeah.
Okay.
So very set, defined rules. Happens honestly all the time. And it's a cheap trade. It's a cheap trade that plays often, which is fun.
I am a huge fan of cheap trades.
Right. Or at least, and if it's not necessarily cheap, like sometimes a wick test might be on a 50-point NASDAQ candle, and I want to see it retrace 50% or more, or excuse me, 50% or less. So like if the wick is like 75% of the candle, that's fine. 50% is money. So like if it retraced 25 points, like you still have 25 points of downside movement, but it's worth it a lot of times. You're going to get like 2-to-1, 3-to-1, 4-to-1.
Interesting. Well, thank you very much for pointing that out.
Yeah. I mean, thanks to the chat for bringing it up, but we'll point it out. And again, that's another concept. There's not a whole lot of brand new concepts in trading, as we all know. There's a million people who have talked about that in different terms. So that's my way of trading it, understanding it. It's just something I've noticed with price action over time.
Okay.
Yeah.
Is that something you learned or something you came up on your own?
It's something I came up with on my own, and then I learned after the fact that there are several different people that use something very similar.
Okay.
Yeah.
All right.
But I just learned about it just from watching charts and being like, wow, this happens often, that we have this like very strong close and then it immediately flushes down, like it immediately sweeps lower, but then it pushes way higher. Like, why is that? And
then you look at that on a 5-minute chart. Does it kind of seem to work on longer time frames?
So 5-minute and daily are the two that I like it on. So like that 40 level on the daily on the NAS, that would be Friday's high. Would have been a nice wick test. And it's still technically on the table as potential. It's just as the time frame opens up, the risk opens up, right? In some capacity, a lot of times. So just because the moves are bigger. So on a 5-minute, the moves are typically a little smaller. 1 minute, it doesn't honor it a ton, in my opinion. But the 5-minute, it tends to honor it a lot, and the risk is pretty tight. Whereas on the daily, you're going to see it play on the daily. I mean, look at this one, right? So you have this nice wick. We closed the next day on, I can't see what day that is, but nice strong close. And then the next day comes down, we go back down, we test 60s. It looks like it missed it by, 5 points or something, but it was literally the low of the session. And then we pushed up, and that was a god tier entry from
close enough, right?
Yeah. So that's the wick test. That's how I like it. This is a great example, honestly, right here. So you see it on the daily. I like it on the 5-minute because I like to scalp more than, a long-term trade. But if I see it on the daily and it lines up with either a ton of volume or a crazy divergence or something like that, like I'm taking that all day.
Cool.
Yeah.
In about 15 minutes, we got Mick joining us to do the shoulder tap. We'll see what the funded traders are doing today. Besides that, we're doing Deanna's coming on a little bit later to trade with Hoag, and I believe JD. Coach Paul is at noon, and we're going to do top quiz today at 11:45 or thereabouts. I'll be with Alyssa for that. Once Mick's on, I will send out those codes for the winners of top quiz the last 2 days. I have it now, so I will do that.
Awesome. All right. Well, it seems like we've got a little bit of time here. Matt, I can show you this.
Yeah, let's see it. The gold stuff?
Yeah.
Yeah, I'd love to see it.
So this is a spreadsheet that I really try and keep up. I'm sometimes not that good about it, but it's just basically, this is from 2022. This is the February of 2022. It's one of the more stark examples of volume of open interest and delta directing price. Okay, so this spreadsheet just basically has the date, the contract month, volume, total open interest of all of the contracts that are available, the net change in the open interest, the closing price, the net change in closing price, regular trading hour delta, and value area direction. That's all that I put on here. So when we start to see here on the 4th of February, we're losing open interest. There's no real direction. I mean, we see the market kind of continuing to move higher on lower volume, lower open interest, blah, blah, blah. That's not really going to help us. On the 7th of February, open interest started to rise. Price rose on negative delta. Well, if we look day over day, we see open interest increasing on negative delta.
Mm-hmm.
That's telling us that longer time frame traders are accumulating longs against shorter time frame traders. So when we start here, basically on the 4th, we're at 1807. Look at all this negative delta. I mean, for two weeks plus straight, the longer time frame buyers are accumulating longs against shorter time frame traders. We're already at $100 move.
Right.
Okay, now we take a little bit off. Price waffles a little bit. Then we end up seeing open interest increasing again on positive delta. This is the short time frame laggard longs getting in. By the time we're through with this, we're up at 2043. It's more than a $20 move. Look at this on the chart.
Wow.
So there are times when I do this and I'm like, why do I keep doing this? I don't see anything. It doesn't help me with anything. But, back in February of 22, if I was trading gold, and I think I kind of was, at the very least, Matt, this would have been telling me, well, we got open interest increasing with price increasing on negative delta. The last thing I want to freaking do is short this market.
Right.
So you got to think, not only what do we want to do? Well, we want to profit from it, but what we don't want to do is fight it.
Right.
And there was a $200 move,
Just straight up vertical
in a month.
Yeah. Do you track this for S&P and NAS, or do you just do it for gold? Yeah.
Yes.
You do it for crude?
Yes.
Wow. So you do it across the board.
Right. And like I said, it's a labor of love.
Right.
I hate doing it because it can be, it can be weeks or months before it really points something out. But when it points something out, you better pay attention to it.
Yeah. I mean, it pays for itself all the time, it seems. Either saving you money by not doing something stupid or, getting you into a move that's going to be crazy.
Yes.
Interesting.
And I'm really good. Like, it'll be my New Year's resolution. Okay, I'm going to do this every day. I'm not going to miss a day. If I take some time off, I'm going to go back and get that information and I'm going to put it all in there. Yeah. And I'm going to be great about it. And then usually sometime around July when I, take some time off, I come back and I'm like, screw it.
Right.
I think we're all guilty of that.
Right?
Pardon?
You could probably automate the collection of that data.
You probably could if you were smart, and I'm not.
Yeah. You gotta get someone over your Topstep to automate that for you.
Easy. Hoag having stuff in a spreadsheet is a good start.
Right?
Like I'm proud of Hoag on that one.
That's very interesting, though. I like it. I would love to see that on the NAT. I don't follow gold enough to like truly know what that looks like. I mean, obviously, I saw that little bit of the chart.
Right.
So, like on this move, are you tracking it for the last 3 weeks here or whatever?
I have not been. Although on my notes every morning, I've got the estimated open interest. Okay. And I can see the delta on my charts, so I can just go back and look at delta.
Yeah.
I haven't seen a real good divergence in the S&Ps here lately.
I mean, it's just such a savage move on the NASDAQ. It's like, love to.
Yeah. Yeah. Here, I can show this. I can bring this up. Here we go. So I can go back day over day in my notes. But I mean, yesterday was congruent delta. Today, congruent delta.
Right.
This day was a little bit of a divergence. We did end up closing higher than we opened with negative delta. Now, What was the open interest on the 17th? Open interest on the 17th, we lost 700. So we actually lost open interest on a delta divergent day. Short covering.
Where are you getting open interest data from?
For now, I get it from. They're changing the access to it.
Oh, okay.
At the beginning of the year, of course.
Right.
But here's where I get it. So you get it's cmegroup.com daily bulletin. Now, beginning Monday, January 8th, settlement data will no longer be accessible through this.
Some classic CME stuff right there.
Right. I don't know what they're going to charge for it, whatever it is, but let's say we're going to gold, metals. So we go here. Here's gold. Now, gold is pretty good for the open interest information because most of the open interest is always going to be in the front month, right? We're in rollover, so we're going to be moving to the February contract. Look at the open interest, 224,000. We got 191 here, so but the volume is still in the Ds, so we're still trading the Ds. That makes this all a little bit blurry because I collect the totals down here, right? So we added 1,150. Yesterday, and that is the final. There's two different versions of this. The one that I get at 6 o'clock in the morning when I sit down is preliminary, and it's an estimated number. Okay. So the estimate was positive 3,200. It actually came out plus 1,150. Okay. But when I'm looking at like something like crude oil. This is the final, but when we look at this, look at all the open interest out into the future.
Right. I would imagine crude would be crazy on.
It's a hard read when you're doing that, when you're using open interest.
Because crude is such a actively traded, like settled commodity, right? Like people care about that.
Yeah,
I mean, gas traders do, or oil traders, I guess.
You look at, the January contract has 340,000. Well, how about the December 26th?
Right.
27,000. I mean, there's so much open interest out into the future in this, it makes it difficult to read.
Yeah.
And mostly the equities are pretty good about that too. I mean, we're coming into rollover in the equities, but the vast majority of the open interest is always in the front month.
Yeah.
We got 42,000 in the March because we will be starting to roll over. Makes it a lot more clear.
Right. Do you trade rollover week?
I try not to.
Yeah.
It's probably a kind of a bias from being on the trading floor because outright traders, a lot of them took 2 weeks of rollover off. But if you were working the spread and you work in the back month, that was your money. Was that 2 weeks of rollover?
Right.
So most of the outright traders were probably struggling or taking time off during rollover.
Yeah.
I don't like rollover.
I don't either. It's a very hard month for me to trade, or weeks for me to trade, excuse me. Especially because I'm utilizing volume and delta so much that when those things are split,
yes,
the pain. It's like a big pain.
it makes it very difficult to use that information,
right,
for anything. I mean, it gets so blurry.
Yeah, like super blurry. So I don't like it, but I typically watch it and just try and passively trade. I don't know.
So you got your wick test, and you've got the other named trade that shall remain unnamed.
Right. Yeah. Yeah. Well, that one is the one that's I guess the 80-20 one that's unnamed.
There's another one. Yeah.
Yeah. The other one that's impossible to trade though on rollover. the delta divergence is impossible to trade on. It's very not good on rollover is the thing.
Right.
So like that's, and it's the problem is that you'll see it a lot because everything is split. And so you'll see a delta divergence all the time, but it's like never actually hits because it's, you know, it's literally split between two contracts.
Right. So you got one divergent and one convergent. Right.
And I will only ever watch whatever has got the most volume because that's how I work. And so I'm not good at watching two contracts at once and trying to trade and figure out which one's doing what. I just want to trade whatever's got the most volume and roll over with everybody else, you know?
Right.
So it makes that week every quarter or whatever. I typically try and go out of town or something. Like, I don't like it.
Kind of makes your eyes kind of split in different directions. Like
yeah. So I've always been curious how people trade it who are not me. That's part of the reason why I'm liking this so much is because it's like, I don't know. It's nice to hear other people's thoughts on situations like that, you know? And
yeah. So before we get Mick in here, I was thinking if we don't kill our computer right now, doing the hot streaks real quick. So
sure.
I'll do the tap on the table because I don't have any sound effects. Might take a while. The computer is probably dying in the background.
Hey, success.
Eric, 27. That makes him the new leader. If Massimiliano never trades again. Fan H, Gregory K, Joel R, Anthony L. Congrats to all.
Nice work.
The hottest of hot streaks.
Yeah.
These guys.
Love those hot streaks and the fact that they are taking a little bit every day. Those, you know, they're not huge, you know, profits, just profits are good, right?
So somebody mentioned in the comments too, they kind of pooched. We had to have an update on what was going on with Snoop Dogg. Let's see if the computer's still.
The solo stove is such a good play, honestly.
We were convinced. Let's make sure that our internet's back up to speed here. This was the dumbest possible, I feel like, outcome of this. I thought for sure, I had a poll in here that was like, is this quitting smoking thing for a Super Bowl commercial? Like, is he selling edibles? But then when it came out 2 days later for like a smokeless stove, I was like, wow, that's a lot of juice for a lot of nothing.
It's a smokeless fire pit, right?
Yeah. Which they still smoke. All of my experience with a solo stove, you still get smoke. So I don't know.
He can only do that once.
All right.
Right? He can only once go out and say, I've given him a smoke. If he does it again, you know, it's not going to work, right? I thought for sure it had to be like some huge edibles deal or something like that. Really quick. I'm sure they did pay him well. People in the comments, if you're in the industry, is there a lot of money in smokeless fire pits? What even is it, Matt?
Yeah, Solo Stove's a public company. You can go see their financials. There is a lot of money in it.
Yikes. Okay, I will have to check that out.
Yeah. It's definitely a trendy product also. So
yeah, I see a lot of folks with them. I don't know. I kind of like my dirty old fire pit.
Yeah, I'm an old school fire pit guy for sure. The Solo Stove doesn't give off a lot of heat either because it's all kind of channeling upward.
It all kind of pushes it up.
Yeah. So, hey guys, it was fun. I'll see y'all next Tuesday. I'm gonna hop off here.
All right, Matt's got to go. Matt, thanks for coming by. We'll let you go do your thing.
Good luck on rest of y'all's trading sessions, and have a great Thanksgiving.
Certainly.
Matt, thanks for sharing everything. Thanks for sharing the wick test and the 80/20s and the other one.
Right. Yeah. Well, you'll hear me talk about it more. So if we see him, I'll talk about it more. Appreciate the open interest stuff too. It's interesting with Delta. So
all right.
Yeah.
Good.
Godspeed, Matt.
All right. Have a good one.
Then we're back to 2, Hoag.
Yeah, we are. Well, we got shoulder tap coming up. As a reminder, everyone, don't forget we are having Danny Trades back on next Monday. Next Monday after the holiday. I won't be here for that, but I should be out on Monday and Tuesday, I think. We'll see, but always looking forward to hearing what all these guys have to say. And, thank you, everyone. Thank you, Matt. Awesome. And are we going to the shoulder tap now?
Yeah, I think what we're gonna do here is take like a little break right here for coffee and what have you. We're coming back right after it with Mick for shoulder tap. And I'll use that time, too, to send the emails to the people that need them from earlier.
Awesome.
So we'll do that. So see you after that. Stretch your legs, stretch your arms. Come back in a few minutes and hear about our funded traders.
Yep.
We'll see you in
Hold
a
tight.
few.
We'll be right back.
G'day, Mick.
Good day, fellas. How we doing?
Doing pretty well. How you been?
Good. It was a busy start to the week yesterday. A lot of excitement, though, and kind of looking forward to getting together with family later on this week. And started thinking about all the things I'm thankful for. There's a lot.
I bet.
I'm thankful for you, Mick.
John, I've always been thankful for you since I started back in 2015 with the company. Took me under your wing, and we've had a lot of fun. Thankful for you. And this TopstepTV has been a ton of fun, so I'm thankful for everybody who's involved in that, and especially all our viewers who are, keeping it alive for us. A ton of fun. Hopefully, everybody's enjoying. I think they are, and hopefully we can just continue pumping out good content and new and exciting things. But with that new and exciting stuff, I got some stuff to share. First, I'd like to start out with, I'm going to call this group our heavy hitters. The Kyle, the Hugh. Now we've got Danny Trades on here. We've got Patrick Wheeland. Patrick Wheeland, who, by the way, put up $20,000 in his live account yesterday.
Nice.
I think it was his first day trading in the live account since we transferred him the other week, which we did on live TV because he'd been trading so well in his XFA. So of those heavy hitters, it was Danny Trade's first day today. It was a reminder, Danny had put up $120,000 in his express funded accounts just last week in 4 short days. We transferred him to live yesterday. Today was his first day trading in the account. Down $3,000 in the account, no big deal. If you remember, Danny has his risk reward and his money management framed out extremely well. So I'm not even batting an eye at this. For someone who puts up $20,000 winning days, $70,000 winning days, a $3,000 losing day isn't too bad. And I know he's very much so at peace with that. So happy to have him.
He's going to be back with us here on Monday. Back on TopstepTV. We get a chance to talk to him again.
I heard that. What a cool guy. I'm going to be watching the segment. I've enjoyed getting to chat with him a couple times. I look forward to, getting to do that more. I tried him yesterday. I went right to voicemail. Just wanted to make sure he wanted to start that live account in the month of November as we're in the holiday week and there's only a few business days left after that. So yeah, that'll be exciting for everybody watching now. Make sure you tune in and watch Danny Trades. He's got a great head on his shoulders. Super young guy who's making tons of money, not only with Topstep here, but in his own personal account too. So he's an exciting person and a great personality to watch. So I'm glad we got him on again. Of the other heavy hitters, we've got Hugh, who's also down $3,000 in their account today, and Kyle down $3,000 in their account today. Again, these are traders that put up massive winning days, so they I don't bat an eye at these $3,000 losses, really, even if they have them regularly because they're trading big. When it works, it really works. When it doesn't, they hit a $3,000 loss limit, which is relatively small compared to what they can take down on their winning days. So moving on, kind of a quiet day today in the markets. I don't have a ton of shout outs for today. Big shout out though to LB on her first day in the live account yesterday. She finished the day up, I want to say $9,000. I talked about her yesterday. And then today, Peter M up $10,000 in his express funded account. Very happy to see that. It is by far today the largest P&L we've seen from the group with narrow price ranges in the equities and most of our traders trading equities. So moving on from the heavy hitters.
Wait 1 second. I want to say, we appreciate all our traders, and I just want to you call out one particular trader, and don't think that I'm not calling out all of you. LB, so happy you're doing well.
Yeah,
if you're watching, I see you, I feel you.
John, she's been in the program with us for a while. We've both worked with her in the past.
Yes,
very cool.
Long time. And has she done coaching with you, John?
No, we just had a lot of conversations and a lot of, kind of back and forth about, how to succeed at Topstep. I mean, if you're a successful trader outside of Topstep, think you may have to change things a little bit to get your feet on the ground here, and she's done a really good job of that. So I'm really happy for her.
Yeah. Well, I'm sure all of those conversations that you had were in one way, shape, or form coaching, even if they weren't official one-on-one coaching or group
Absolutely.
coaching. So
Yep.
this is someone we featured the other week when we called her up to live. Been with Topstep for a while and really impressed with her recent trading, not only in the XFA, but early on in the live account. I saw she had small position on this morning, right around break even, up a few $100, a couple $100. So she's a good example of sticking to I won't say sticking to determination and always trying to move forward. She's been trading for a while, and what I've seen lately is very different than what I saw previously. So she's someone who's figuring it out, figuring what works for her, and now she's profiting quite a bit from the market. So very happy for her. I have spoken over the last couple of weeks about a lot of traders, and this is kind of also in line with the shout outs that I give out. You know, not a lot of big P&Ls today. We have a lot of very good traders in the express funded accounts that kind of fly under the radar, and we've talked about a number of them recently. People that have lower average P&Ls for the day, but very, very high winning trade percentages, very high winning trade percentages, and they kind of chip away, hit singles, and they fly under the radar a little bit because they never find themselves at the top of the risk boards or the bottom of the risk boards. They're just right in the middle, stuff that doesn't really catch your eye until you look at a trade report and you see all this fabulous activity and it catches your eye. The Mark Graces of trading, lots of singles, some doubles, and so we've talked a lot about those traders. I've got a few traders I want to talk about today that are featured on the trading cards. The latter two have really good performance, but it's not similar to the performance that we have shown in the previous 2 weeks, which kind of the theme was, consistent wins and whatnot. They are profitable and very much so profitable. However, not big consistent wins. Before we get to those, I want to call out and show the card for one of our newly funded traders. We transferred from XFA to live last Friday. We ran out of time yesterday and didn't get a chance to talk about him. This is someone who you have seen a trading card before for on Topstep shoulder tap. Let's pull up the card for Max M. And I had to have a little fun with our marketing here.
What's his last name?
John remembers. Well, we don't share last names.
Right.
He's got a damn cool last name, and there's a little hint in that image. We broke away from the geographic location, so cool last name. Maserati, Max Maserati, out of London, England, and like I said, Max is one of the traders that has high winning trades like we've shared the last couple of weeks. He's averaging about $2,000 a day trading the S&P. For those of you that are looking at equity indices, we have so many traders trading the NASDAQ. It moves around. It's a little bit thinner. I personally prefer trading the S&Ps. I believe John Hoagland does as well.
Me too.
Moves a little bit slower. We've got a larger tick size, though, $12.50 a tick per contract compared to $5 a tick per contract in the NASDAQ. And I like the S&P. I think it's a little bit of a smoother ride for those of you out there. So if you're trying to figure out, you want to participate in the equity indices, but you don't know which one to go with, look at the NASDAQ side by side, the S&Ps, and we have tons of traders that trade them both. I'm partial to the S&Ps, 500 stock of the larger stocks out there, the index of those. So back to Max. He's a new member, started trading with us in July, as many people have, as we went to the one-step one rule. And he's putting up 90% winning days. He's doing that with 62% winning trades. Surprise, surprise, he's got a nice 2 to 1 risk reward ratio, making about $650 on average per trade while only risking about $367, which helps go to show that with 62% winning trades, you can still have 90% winning trades. It's all about playing the math. And I like Max not only because he's profitable and we called him up to live, but because he's pretty selective with his trades. 7 trades on average per day is relatively low in my book. Usually we see a lot more trades than this. I will get into also low average trades per day on our following 2 people that I'm going to highlight, but 7 trades a day. He's holding for about 55 minutes on his winners and only 41 minutes on his losers. So we know he's more patient with his winning trades than he is impatient. More patient with his winning trades, and he's impatient with his losing trades, which is part of the recipe for success, in my opinion. So very happy for him. I don't have any additional notes really other than what's up on here, but this is not the first time we've talked about Max, so he's obviously got good stuff, and because of that, I encourage, many of our traders out there to aim for these nice metrics that Max is putting up, being selective with what you're trading during the day, how many setups you're taking. So kudos to you, Max Maserati. I have driven a couple of those cars before. They're pretty nice. They're pretty fast.
So Mick,
Yes.
if Max keeps his 62% winning trades and his reward over risk ratio, Max can build an empire, can't he?
He sure could. He sure could. And hopefully he's starting on that empire
right now.
Right now. He should be in the live account trading very soon, whether he chooses to start at the end of this month or wants to defer starting in that live account till December. It'll be a nice start for him, definitely in 2024, and hopefully we keep him in this account and have him keep taking money out of the markets.
If we have him on the show one of these days, he should introduce himself as Maserati. Max Maserati.
Yeah, between Maserati and Max, I think of, F1, which is growing here in the United States. You could say this guy's pretty good at putting the throttle down and winning.
Very well put. Very well put. That's perfect. Now, sorry we outed you, Max, but it's too good.
Yeah, sorry about that. I'm sure that's a relatively common name.
Sure.
With that, though, let's move on to Hassan. I've got a lot of stuff I want to talk about with Hassan. If we could pull up his trading card. So, like I had indicated, Hassan is a trader who's a little bit unlike the traders that we've been talking about before. One of the large topics that Hoag and I had, and Andre too, was shooting for 100% winning trades. You can always shoot for 100%. You should always shoot for 100%. Chances are you're never going to hit 100%. But if you're aiming for it, you're going to be very selective, and the odds are that your statistics and your trading are going to be better when you're only taking the best trade setups that you can. So, with that, Hassan does not have 80% winning trades like most of our traders, or 80% winning days like most of our traders that get called over to the live account. He's at 55% winning days with 53% winning trades. How is he so successful, being only right half the time and only having winning days half the time?
Pay attention. Here's how it happens.
Look down to the bottom of this trading card and you will see 2.5 to 1 risk reward ratio. His average winning trades are $5,300 winners, and his average losing trades are only $2,000 losers. So he trades big. He measures out his risk reward. He's only right half the time, but he's wildly profitable for an average daily P&L of $2,500.
I love this guy.
I have long hold times here. This is kind of an anomaly here with some of our day traders here at Topstep. On average, Hassan, and this makes sense with the average daily P&L and the risk reward ratio, he's on average making $5,300 on his winning trades. His hold times are over 4 hours on his winners.
I love this guy.
I talk about it a lot. I think day traders will make the bulk of their money taking a chunk out of the trend for the day. Mm-hmm. And if you are holding something for 4 hours on average per day, you're going to catch a piece of the trend. If you have a long bias and you're sitting in a trade for 4 hours and it goes up, you're going to catch a big chunk of that trend, if not all of it. Same thing on the downside. Look at this. He's averaging 1.5 trades per day. Only 1.5. He comes in, says, I've got one bullet for the day. I've got a bias for the day. I wait for a good setup, and I take it and I ride it out. He's also not trading every single day. Something I see with a lot of day traders, a lot of people at Topstep is, they might think, and this is my assumption, they might think because the markets are open, I've got to be in there in the action taking trades. Hassan does not trade every day. So when I do see him trading, when I have seen him trading in his XFA, I'm always very excited to see what he can do. And I also start looking at the markets to see what is it that he might be looking at. With the 1.5 average winning trades per day, typically he's making one trade per day. I have never seen him make more than 3 trades per day. And that is something that everybody listening right now should really be thinking about is, if you're in a rut, if you're in a cold streak, if it's not been working for you for a while, if you're not profitable over a period of time and you're getting discouraged, take a breath, take a day or two off, go in and say, I'm going to be really selective with my trading. I'm going to look for one really, really good trade a day. And if you don't see it, don't trade that day. And if you do see it, take it. And chances are, whatever slump you're in, whatever cold streak you're in, if you're that selective, the odds are much more in your favor that you're going to be profitable. Hoag's a really good example of being selective with his trading. Hoag is not, Hoag, why don't you tell us a little bit about your trading and how selective you are? You don't make a bunch of trades per day. You don't do a lot of round turns per day. You trade smaller than you can, and you're very selective with what you're doing.
Yeah, most days, if I trade more than like 3 trades on any given day, I'm probably pissed off and trying to chase money. Rarely does that happen. I mean, Mick, today we sold the opening range. We took 10 points out of a 14-point range, and I've been sitting here ever since, just waiting for the next opportunity. I mean, if you go looking for trades, you're going to find them. But I think you're better just waiting for the trades to come to you. And I have a feeling that's what Hassan is doing. He's just being very patient, sitting there like a sniper, waiting for the right opportunity and then acting.
Yeah. I like what you just said there about if you go looking for trades, they're going to find, you'll find them. But if the trades come to you, they'll be better trades. I like to, in the past, I had liked to use a term of fabricating trades where I would, find any excuse to do what I wanted to do instead of what I saw the market telling me I thought it was going to do and then acting on that. So
it's funny. You call them fabricating trades. I call them manufacturing trades.
Same thing, right?
Yep.
Go into business together, John.
Yeah, absolutely. Trade fabrication and manufacturing. Yeah. Get your trades here.
Get your trades here. Come trades here. Come get your trades.
I'll get them.
Another thing that I wanted to mention before we move on from Hassan is number one, he got called up to live yesterday. He put up $11,000 on the day.
Beautiful.
Yeah.
Wow.
Really good day. This is another trader who, you see the P&Ls, it's big. When it doesn't work, he hits the $3,000 daily loss limit. And some other notable trading days from Hassan, and I like this and comparing it to me saying he has $3,000 losing days. Semi-regular, half the time actually, as a matter of fact. 55% winning days, 45% of the time he's hitting his daily loss limit. He usually does butt up against that daily loss limit when he does have a losing day, as opposed to cutting it off early, because again, he's taken one trade per day. He's got his risk reward measured out and he's letting it play out. If it doesn't work, well, there's another trading session with other opportunities. Sure. So notable days to counter those $3,000 losing days. Recently in this XFA, he had a $10,300 winning day, an $18,900 winning day, $14,800, and then a $7,000 winning day. There were a couple other ones that were under the $5,000 mark that I won't mention, but Hassan's really got the special sauce. I like what he's doing. And again, I can't stress enough, one trade per day, 1.5 trades per day on average, long hold times. It will help you become a better trader. And to go along with what I was saying about John and how he's super selective with what he's doing, and Asan being super selective with what they're doing. Asan's only been with Topstep since February of 2003. I know that he has experience in this industry outside of Topstep.
Okay. Uh-huh.
You don't just get started in this business and start holding things for 4 hours on average. Typically, traders who are new to the industry are going to be trading on a shorter time frame. In my experience with myself personally, and what I've seen with our traders, our funded traders, and more importantly, our traders that are doing well, the higher the time frame you move out to, the better their performance is, and that's the end result performance, and that's consistent profitability and taking money out of the market. So something I really want to put on everybody's radar out there. We've got a lot of shorter time frame traders out there. Do consider that and think about moving to a higher time frame. For myself, it was one of the most difficult, challenging things that I've ever done. It is not easy to sit on your hands and watch your P&L go in your favor, against you. Start thinking about, should I have moved my stop to break even? Shit, I should have moved my stop to break even. And actually watching something flutter in your favor, against you, it's hard. And then riding it out and starting to think, well, I could just grab this cash right now. Do I grab the cash right now, or do I wait for it to go to the level that I thought it could go to? You have to really work on your psychological end of your trading in order to keep your confidence, stick to your guns, and actually watch something unfold over the period of 4 hours.
Yeah.
That's a good chunk of the day session right there.
100%. Yeah. I love the fact that we're looking at ES traders today too.
Yeah. Yeah. Well, we don't have an ES trader. I believe he's all NQ. Yes, he is. Let's talk about David out of Santa Ana, California.
And there's David. Santa Ana. Wow.
Yeah, so similar to Asan, David's metrics here look a little bit, David and Asan's metrics here are a little bit unique compared to the people we've talked about over the last 2 weeks. David, before I go into average daily P&L, 60% winning days, 75% winning trades, which I guess I just went into since I listed them, daily risk reward makes me happy. He's in a 50K. He'll be in a 50K live account shortly because we called them up from XFA to live yesterday. Daily risk reward, he's got a $1,000 daily loss limit. But with that $1,000 daily loss limit, he still has $9,000 winning days, $5,400 winning days, $7,400 winning days, $3,300, $2,900, $2,000. He's putting up big 4-figure winning days.
Cali Dave.
All while risking no more than $1,000. I've heard, some comments about people being gambling and whatnot. Some of the successful traders we've talked about in the last week or so, gambling. If you're putting up numbers like this and you're risking only $1,000 per day, I wouldn't call it gambling. Now, I say that his risk reward is backwards. He has flip that 2 and 1. It's a 1-to-2 risk reward ratio. Mm-hmm. He's risking about $200 for every 100 that he's making. So he has to have a high percent winning trades, which we see at 75. He's right 3/4 of the time. Those winning trades are, need to be bigger, but the math all works out here. Average daily P&L of $2,600. So he's done very well. He's moving to a live account. And I would say for David, if you are watching, work on those hold times. He's holding his winning trades on average for 4 minutes and the losing trades on average for 7 minutes. I've said this before with some of those people that have high winning trade percentages and lopsided holding times. It might just be because they're so used to making money on their trades that they get a little bit more married to their bias and they don't cut it off early enough because they're so used to being profitable. So Those are some things for David to consider as he goes into a live account. We will want to change that risk reward ratio, at least make it 1-to-1. The metrics are going to look a lot better. If it was 1-to-1, that average daily P&L would be a higher number. The winning day percentage would be a higher number. And then be more impatient with those losing trades, cut them off quickly, because it's hard to sustain such a high winning trade percentage when you're trading.
He's doing it.
NASDAQ. Yes.
He's doing it.
He's doing it. So
pretty active
kudos
too,
there.
I mean.
As Brett likes to say, a feather in your cap, David. That's a feather in your cap.
I like that.
Yeah. Probably pretty active trader though. I mean, with an average winning trade of $99 and an active winning day, an average winning day of 2,600, he's pretty active.
Yes, he is. Notice I did not mention the average winning trades per day. It wasn't a number that I really thought to be my liking exactly. And you know what? That's okay. I don't have to like everything about these traders because everybody's different. Here at TopStep, we have so many different traders trading their own strategies, looking at different indicators, trading at different times of day, trading on different time frames, both long and short, scalpers, position traders, and whatnot. So, everybody's different, and a lot of people can get the same results, get to the same place, doing different things throughout the sessions.
Yeah, for sure.
So really quick before we bring in Diana, Mick, looks like you cleaned up the mustache a little bit. Is that for Thanksgiving?
I had known over the last 2 weeks it was getting a little unruly. You notice you can see a little bit more of my teeth when I smile, or maybe even my top lip. I took care of that this morning.
No, that's nice because someone in the comments was saying that you're looking more and more like Dr. Eggman from Sonic. And I don't know if, James, if you have a photo we can compare here.
Was that I actually almost put on that Sonic movie the other day. I saw it. Our cable box went out on us. Coincidentally, our TV went out on us, one of our TVs, so I just replaced the TV, and I still need to get to the cable box, but I don't watch a ton of TV. I've got a 9-month-old daughter at home, so when I get home from work, it's all the baby, and then I'm pretty wiped out. We eat a late dinner and usually go to sleep. So TV's not something I've been watching, but over the weekend, while I was on the home screen of the Samsung, I saw on one of the apps, Sonic was there, and it's Jim Carrey who plays that character, that role, right?
I believe so. I don't know the Sonic mythos. I was more of a Nintendo kid, not so much the Sega, right?
Yeah, I remember I never had a Sega. My parents wanted to keep me away from the consoles, the video games. I ended up wearing them down and I got into that, starting with the original PlayStation. But like as far as Nintendo and Sega went, never got to play that. Although I used to go visit every Super Bowl weekend when I was a little kid, I'd go visit my cousin Jordan and my aunt and uncle and stay with them for the weekend. And Jordan, she had a Sega. So when we would, when I'd go over there, I was all about the Sega, more so about the video games than the family. At least I got to play with my older cousin who I looked up to. And
all right.
Very nice.
Sounds awesome. Yeah. And James, thank you very much for showing that just long enough that we don't get into trouble with Sega.
There you go.
Nobody tells Sega. Well, Mick, thanks so much for coming by and doing the shoulder tap today. I sent out that email to the top quiz winners, by the way. That's why I dropped off for a bit.
Okay.
Any parting words?
Hey, we're talking about, trading here on TopstepTV, and we're talking about a lot of people being successful, and I think it's important on Thanksgiving week. It's not all about the food, it's about getting together with family, but more so being thankful for what you have and thankful for your small successes, little wins and whatnot. And I will say, even if you're a struggling trader, you're still someone who should be, who's in a position, a lucky position, a fortunate position to be able to be participating in these markets. There's a lot of people, more people than not, that don't have access to them. So be thankful, even if you're struggling. You're in a position that, billions of people would love to change places with you. So be happy for what you've got, be thankful for what you've got, and don't abuse it, appreciate it, and keep working hard. Try and work on that discipline, and odds are good, even better things will come.
Very well put, Mick. Very well put.
Yeah.
Thank you very much.
Always
Thanks.
thoughtful. Risk manager Mick. So right now we have Deanna in the waiting room. So I think what we're going to do here is take a quick break, do a line change as they'd have in hockey right now. And I
There you
believe
go.
that Deanna and JD are going to come in. I'm going to work on the quiz right now. So we'll do that at 11:45 or so. But Mick, thank you. Hoag, always a pleasure.
Always a pleasure,
betcha.
Jack.
See
Thank
y'all.
you.
And
Mick,
we'll see y'all after a few minutes.
see you soon.
Have fun with the rest of the day, guys. Take care.
We'll
Thanks,
be right
traders.
back. Welcome to the Power Players segment. We've got a couple of good power players. You know Deanna, you know JD, you know me. We're going to just kind of hang out and talk about trades that we may be thinking about taking currently in, or maybe some past opportunities. Dee wasn't with us yesterday. She had a couple of good trades in crude oil yesterday, which has been absolutely no opportunity for anybody today in crude oil, unless you're a really good range-bound trader. So how are you?
Yeah, I'm very well. My King Charles Cavalier made it through the dental, so I'm very calm now, very happy. So it's all good. Yeah.
Good. And JD, how are you, man?
I'm doing excellent. Actually, kind of struggling to stay awake today. It's been kind of a quiet morning around here.
Well, who's all in the office? Just you
it's
and
just Mick and I. And I'll tell you, he is one tough act to follow. It's always hard going on after Mick.
Well, we're
he's
glad
sitting right
to have
behind
you.
me. Maybe he'll
We're
wave.
glad to have you here. I'm thankful for both of you.
Yeah, thanks for having me. I love being on here.
Mick is he's kind of photobombing you.
Oh, there he is.
Yeah,
Hey, man.
there it is.
What's up, Mick? All right. So, Dee, do you currently have a trade on, right?
I do, yes. I'm short gold. So that was fading the auction. So I can have a chat.
There you go. Now we got it.
Oh,
We
there
got
it
these
is.
charts today.
These charts, yay,
All right.
finally. Yeah.
Let's
So
check out these charts.
this is obviously a separate charting platform to some other things that are available. And all of these indicators that you can see, they're all from my technology team, Blatek. So we got the regular TPO profile, we've got the supply and demand zones here, and we've got the volume profile here. So it's all on the same chart.
So the supply and demand zones are your boxes.
Yeah, they're my boxes. I can actually go up to the higher time frames where that's a little bit less messy. So effectively, this shows you where the previous areas of supply and demand, significant supply and demand are, and then you can also control that via the overlaps if you want to see nested zones and all of that stuff. So it's pretty like high functionality. There's a lot of stuff in there, but it makes the whole process a lot easier so that I don't have to draw all of that by myself. And then obviously I have my intraday trading tools. Let's clean that up a bit.
Now, what time frame is this?
This is 30-minute chart.
30-minute chart, okay.
Yeah, this is gold futures. So I have the TPO profile overlay here, and I have the letters on the right side. So this is the standard profile. Yeah, and I mean, if you wanted to, you could just have the letters, but I would have to like mess around with the TPO size, like the tick size, to make it look pretty.
Right.
And I can't be bothered with that right now. So I still have that TPO profile here. So if I want to see actual letters, they are right there. But the overlay, the overlay enables me to see the candlestick patterns as well as the TPO profile right on the same chart. So it simplifies everything. You know, we used to like drag other windows from the other platforms. It used to annoy me so much. So yeah, now
what we're looking at there is the pink line is the point of control.
The pink line
in the profile. In the profile.
In the profile, that's actually VWAP.
VWAP,
So,
okay.
Yeah, but there is it should be like a green. Yeah, so it's a green line here. You can probably see that a little bit better on this side. So wherever there's the widest profile, usually you can see the TPO displayed. I don't know how much you can see that on this chart, but here it is. It's green.
Okay.
And if you increase the chart enough, there it is here as well. So it's
Sure.
the same information.
Okay,
So it makes
understood.
everything really easy.
And value high and low are the orange lines.
Yeah, so you have the developing value, which is in orange. So
Okay.
developing value high, value low. And then the previous day's value, I have it extended in purple.
Got it.
Nice purple. So here we go. This is the yesterday's session.
Okay.
And you could also do kind of a half backtest mode, where as you drag the indicator backwards, it shows you what it all looks like at the time. It doesn't hide the candles.
Trippy.
But, if you, yeah, exactly. But if you want to test your levels and see how the price acted around a particular area, this is like a very quick way to do it. So we
Nice.
have a lot of functionalities there. Obviously this is MetaTrader 5. I mean, it's, a very old platform, and initially they were in Forex, but then they tried to do futures. So this is basically just CQG data feed.
Understood.
Nothing super fancy. But yeah, actual futures contracts. I use MT5 mainly for charting, so that I don't have to do fat finger trades.
Sure.
Yeah, and whenever you're trying to drag lines and stuff, they're inevitably you're gonna click on something that you're not supposed to click on.
And you're in a position.
Yeah, exactly. And then you're like, oops, no stop loss. So we don't want that. All right, so I have this short in GC. So let's start from a top-down approach, so everything can make a little bit more sense there. So on a very large time frame, there is a supply. So this is showing both the daily and the weeklies. This is now the weekly chart.
Mm-hmm.
Let's clean it up. And as you can see, there were some previous sellers here. And we've come back to this area pretty quickly. Now, usually when you're looking at longer time frames, that can be a bad thing, because it means that the price wasn't able to stay away from the level for long enough. However, for intraday, we have different time frames, different durations, and really a move only needs to work out for about 40 minutes, couple of hours maybe, and we're happy, right? So every time the price comes back into one of these larger time frame supply-demand zones, I'm trying to see if I have an excuse to go in with that directional move to the opposite side. And then I start doing the top-down approach. So that's what I did with gold. I saw this massive pop upside, and I thought to myself, that's not really that logical around this area. And then I waited to see whether they can basically run out of steam, and they did. And then we had the so the auction fade back down, and now we're back inside the initial balance. So I'm still in this trade. Currently, it's sitting at 1.5 R. Whenever I trade, I use typically a 35 tick stop loss, unless the liquidity changes a lot. Then the stop loss would need to shift.
Similar to crude oil. Is that you're saying?
Yeah, they're very similar. I mean. If you hold on, let me do this. Maybe drag it over here so that we can see. There we go. So I'm just going to move this up so that I can show you this bottom area. There we go. So these numbers here, this is how I always say, oh, that's the average session range.
Right.
Yeah, well, this is what this is. This top row tells you the regular trading hours, average session range. That's how I get my levels.
Okay.
And then this average daily range down here, that is the full 24-hour period.
4 hours,
So
okay.
so if you can see, it's 196 for the entire day, and the majority of that range is throughout the COMEX session, which is 191 ticks. And then in crude oil, you have something similar, even though it's a little bit bigger, but not in the last 2 days. So we have 197 for NYMEX and 240 for the overall day. So very similar, and that's why I use about 35 ticks on both of those. Obviously, if I was trading something else and it has a tiny amount of range, then I will scale my stop loss to that, just to make sure that statistically I have enough space for the trade to work out, for the 2R multiples that I usually look for. So yeah, that's one part of the average session ranges, and then the other part is to actually show me where the market will reach that area and then potentially look for either a reversal or maybe a large volatility day. So it all kind of plays into some systematic decisions. Today on GC, we did have an average daily range high that got exhausted, so we reached it, but the market then ignored it. It just went straight through it. So that could have meant that we might have a single direction day on our hands, but because it's a holiday week, I was really skeptical of that read.
Okay.
Okay, that's not that logical. And when it comes to the session range, I'm just going to change the color there because it's dark blue, and I'm a little bit blind. All right, so see that line here? This is the average session range. So it'll either go up or down if it gets to that point, and then you might have a high probability reversal opportunity.
Okay.
So it's literally just some numbers, median, average. You put it on a chart, and then you see how the market behaves. Now, with the average daily range, whenever that gets ignored, like it got ignored earlier, that, like I said, can have some effect on the volatility. So it means you might be looking at a greater volatility day, so you have to be careful not to go against it. And that's why you want to have profile or something like that to actually
to give you the context and
yeah. So context is everything, as you know. Yeah,
Right.
I mean it's all very well to just go, oh yeah, short, long, there's supply, short. That's great, but we need to have context. Intraday, because just when you come into a supply, it doesn't mean that everything's going to reverse. We might go through it, right? So it's still one of those things where you have to match a whole different side of things and then see whether it makes sense. And that's also why I like to create different scenarios for the day so that I'm not stuck in just one thing. I'm just going to book this trade because it is lunchtime technically, so I don't want to lose out on this. So that's $460 there.
nice job.
Very nice. Let me update that for you.
Yep.
We have JD who's with us, and you're gonna see what he's been up to today. He's also updating the Chiron. So
Yeah.
Yep, I work on the production side here at Topstep, but I also have my personal brokerage account up, and I typically don't trade during the New York lunch hour either, like 11 to 1 o'clock. I just find it gets a little stale, but I've been looking at this bear flag pattern forming in the NASDAQ. So I am working an offer right now at 970. See if anything happens there. I put in a 15-point stop for it also. Just missed me last trip up. I think the high was at 69.
Ooh, good eye. Good eye.
So
Yeah,
yeah,
this is what you're looking at right here.
yeah, I'm playing the upper channel line of that little bear flag formation.
That
Got a
looks
couple
tasty.
tickies. Got a couple tickies before lunch.
Yeah, it looks tasty.
Nice. Yeah.
Well, I'm currently still doing nothing. We are, I would have to say, Deanna, well inside of our average daily range in the S&Ps.
Yeah. Yeah. Everything's quite rangy there. There was a bit of a failed auction, but you would have had to guess that from what I can see here.
On the downside there.
Yeah. And now we're coming into an area where the market first sold off at the beginning of
Yeah, the opening range.
trade. Yeah. So if anything, so this could be a couple of scenarios now for late in the day. We could either create a neutral day type, so to go to the other side of the initial balance, extend that, and then kind of sell off. If we get into this area here, and we create some single prints there, so on the upside, I wouldn't go against that today because we failed the auction already.
On the
And there's
downside.
and there's a little buying tail there as well. That has a chance to increase what I like to refer to as the asymmetrical neutral days. So it's basically a trending day that started off with a test of the initial balance to the other side and then just carried on. So that's certainly one opportunity, one probability. Because there's an equity index, they do have that upward bias. So I'm always a little bit careful with shorting equities, even though I have done it, obviously. But I'm always very risk averse. So if my trade doesn't go into profit on the short side immediately on ES or NQ, I'm out. Like, I'm just like, ugh, no.
Okay.
Now, if we,
Especially on a day like today where, I mean, we're waiting for the FOMC minutes to come out. So the upside grind seems to be in play here.
Yeah. Yeah, like yesterday on crude oil. Christ, that was so painful.
But you had a good day, though, didn't you?
Yeah, I mean, that first trade, obviously I got out of it. But the second trade, it was exactly the same concept. I was looking for a fade of the auction. And then it finally did it. Like, literally, I think it was like half an hour before settlement, and I'm like, yeah, good morning, guys. Jesus, like, that took forever.
Thanks for showing up.
Yeah.
JD, you're not in yet, right?
I am in the market. I'm short at 970. Just a micro contract too. I have never traded in front of a crowd before like this, so yeah, it's cold feet. So I threw up the micro contract.
I feel you. It ain't easy.
Yeah.
It ain't easy.
No, definitely not.
Right. Well, we'll keep an eye on that with you, JD. Deanna, did you want to talk about those trades that you took yesterday in crude?
Yeah, I think it would be pretty useful because I saw some people in YouTube chat that is you still in on that? It's like, yeah, because it's a supply, and you don't long into overhead supply unless you're absolutely certain that the market is not gonna come and smack you right in the face.
Yeah.
So yeah, let's go back. So
hey, see, they got your Twitter account on there. Wakey.
Yeah, wakey, what's up? Yeah, finally, man, that was the longest wait of my life. But yeah, and then once it turned around, it just went straight down. So I was like, okay, cool. But yeah, it would have been nice if they appeared a little bit earlier in the day. So let's go back in time.
Yeah.
To see what was going on. So here we go. This is where I was trying to short, right? Now, like JD says, it's not easy trading live. Obviously, you will miss clues and cues sometimes. So basically, I had the average daily range, which I did mention, but I was like, oh, I've got to get a trade in live. I've got to get a trade in. So I was fumbling around, and then my computer decided to reboot, so it threw me off completely. It does happen. So I came back and I completely forgot what I was initially thinking as a second scenario. So I'm like, you know what? I'm going to short it again, and then it just. Could
you slide that chart down a little bit because it's kind of bleeding off the top of our.
Okay. Yeah. Sure. Let me adjust it like this.
There we go.
Yeah, that should be a bit nicer.
Thank you.
Hold on. There we go. This should be back. No. Okay. Yeah. So going back. So here we go. So this was where I was shorting. I'm going to pop a rectangle here. So that was the area in question. And I was looking for the auction to fail because we actually have a supply there. So from a daily chart. So this is now a multi-time frame little edge of the supply. The indicator is showing it. Just literally there. And it did kind of start to react. It's just that it kept edging slightly higher. And this is why I had the snail in the previous Twitter post. I was like, crude oil today, and then snail. And then Dolby said, tilt it upwards a little bit. hilarious comment. But yeah, so it just kind of kept edging higher. So I didn't like that. So I was like, you know what? I'm just going to kill this and then go have a break for a couple of hours and see what happens later. And sure enough, it started to reverse. And then I was like, oh, great. Here we go. They're finally awake. And then it literally got there in an hour and a half. But most of the move was done in the space of 30 minutes.
Sure.
And this is crude for you, And then I've had some of my gold members who are like, oh, crude has been really shit. And I'm like, yeah, it's not always crazy. We can't always have every single day that crude moves 200-300 ticks. Sometimes you have to weather these sorts of annoying days. It's a part of being a trader. And as long as your risk management is in order, and as long as you don't go doing 20 trades trying to go long, short, long, short. Yeah, because you can get caught up.
Yeah, you get caught up with that.
Yeah. But in the end, luckily, I saved my day, so I got the full 2-hour target. Sometimes I go more. It depends on the type of a day we have. But if it's a slower day, I will typically aim between 1 hour and 2 hour. And then if I get 2 hour, I'm like ecstatic. It's like super happy. So yeah, day saved. Yeah.
Nice.
And then today I wrote some scenarios.
Right?
Huh?
Right. They finally showed up.
Yes, finally. Yeah. And then today I wrote some scenarios. You can see it here. So I was thinking, well, if this accepts the value area and then we also get some push to the upside with the auction, I might want to go value acceptance and then kind of skim about 30, 40 ticks off of that because the value area from yesterday, from the previous session, wasn't that big. Unfortunately, it never really got above the initial balance. It kind of popped outside of it just a little bit and then quickly they just slammed it down. Yeah. And now I'm looking at a responsive activity day. This is now a range bound day. So here I have a second scenario that was really meant to happen for the earlier part of the session, not this late in the day. So I was looking for the price to reverse at the value low from the previous session and then to go into the sustained auction potentially. So that is not happening. This is like too late now. And the fact that we are only looking at about 80 ticks range for the entire session, that means pause off the keyboard and just watch it. Maybe if I get another opportunity to the short side, I might want to get involved for like 35 ticks, 30 ticks, just to skim a little bit off the top. But frankly, I don't have that much budget to play with today because I didn't trade much at all.
Right.
So I don't really want to ruin that with subpar setups. So I'm probably not going to trade more of
Just sit on your hands.
Yeah.
Or as I call it,
sit on my wings, grasshopper wings. Yeah. Sit on my wings like a grasshopper.
There you go.
That Ray says that a lot. It's like, sit on my hands. Sit on my wings.
JD.
What's up, guys?
It's good to see you. We don't get to see you that much. I know you're with us every day, and thank you very much for the job that you do. You've been around these markets for a long time. For those of us that don't know you, tell us about your experience and your family and why you're here.
Oh, sure. So yeah, I kind of grew up in the business. My father was a commodity futures trader and broker. He's a coach here at Topstep also, Coach Jack. You might have run into him. I started my career when I was in college as a runner in the grain room at the Chicago Board of Trade. My super early 20s. Actually, I was 20 years old when I had my first job as a runner on the floor.
Wow.
I spent roughly 3 years with RJ O'Brien, running the phones in the grain room. Then I moved to the financial room. I was eventually recruited by a prop group trading bonds. So I spent about 6 years in the bonds before moving off the floor, trading upstairs for another 7 years after that. So my career spans back to the late 1990s.
The early 1900s?
The early 1900s, yeah. 1999 was when I had my first job.
How did you end up here at Topstep?
So I kind of segued into market commentary, like writing sort of market recaps daily, like just explaining the way I was trading, whatnot. I was working for another financial services company at the time. And then I saw an opportunity open up at Topstep. I've been here for 4 years. I met with Jack. Jack Pulser actually hired me 4 years ago, almost 4 years ago to the day. I remember.
Happy anniversary.
Oh, thanks. Yeah, but it just seemed like a perfect fit, like great trading company. I love trading. They were looking for someone to help manage content, write content, just kind of do all that. So, and then that segued into this TopstepTV production job that I'm at now, which I also love. I see some comments in there. Coach Jack is the best. Oh, that's Michelle. She has to say that, right?
Well, Coach Jack is the best. I got to tell you, I have a long history with your dad.
That's right. That's right.
Doherty. One of my jobs is an early floor rat, we used to call ourselves. I was a deck holder in the lumber pit, and Jack Doherty was a broker in the lumber pit. I didn't work for Jack, but I knew Jack for, I don't know, 3 years, 4 years, 2, 3 years, for as long as I worked in the lumber pit. I always stopped back and said hello. Jack was always a gentleman and a very, very nice man, good trader. It's great to have Jack with us, and thank you, JD, for bringing him. Sometimes you fill in for me on the opening call, and your knowledge of markets and charts is top notch. I always enjoy watching it, and you might get that chance next Monday and Tuesday.
Yeah, I am filling in, and thank you for the compliment. It's very humbling coming from someone like you. I appreciate that very much.
You're one of the best. One of the things I love about you, JD, is your thick Chicago accent.
I think I used to fake it so much growing up that it just stuck. I don't remember ever having this accent as a kid, but I would do it as a joke so much, and now here it is. It's never going away.
And now it's stuck. It's like you learn an Irish accent, and you start speaking like you're Irish.
Right. I was actually at the Bulls. I was at the Bulls game last night, like trying really hard to sound like the guy from Chicago,
Yeah. Well, if you want to get up to the north side from here, you got to get over to the outer drive. Take the outer drive north. Get off at Belmont. Take the inner drive up to Addison. Take a left. Within a few blocks, you're at Wrigley Field. Although very polarizing between the Cubs and the Sox. You may want to stay on the south side in Bridgeport and go to the Sox game.
This is true. Also, after the Bulls game last night, we stopped at the Billy Goats for a couple pops, and we had a good time.
Very Chicago evening. You were at the Bulls game. You went to the Billy Goat, had a cheeseburger, a couple of pops.
For those asking, yes, I'm still in that short position from 70. I'm thinking about tightening up my stop, though. It doesn't look like it's...
Hey, there he is at the Bulls game.
Hey, there he is. Awesome.
Yeah.
I was gifted some floor seats. My wife and I and a couple other friends went. I had never sat on the floor. We sat right next to the Miami Heat bench. I was getting sweat from Jimmy Buckets splashed on me. It was awesome.
Well, all righty then. I've never been on the floor there either. You must know some pretty influential people.
They were a gift. A buddy of mine, his father has season tickets, the floor seats. He's never given them to us before, ever. So it was like a special thing,
Wow.
Like, as soon as he got them, he called me like, "You're in. Get your wife. Let's go." So we went.
Surprised you didn't go to Tefano's before the game.
I haven't been at Tefano's in years. Is it still open?
Oh, yeah, it's still there. Yeah. And Vernon Park Tap.
The Vernon Park Tap.
All right. Very nice. So, yes, glad to have you with us here, JD. Glad to have you with us here at Topstep. And, looking forward to watching the opening call next week and seeing what kind of wisdoms you can give me. Always looking to learn. So I appreciate
I'm looking forward to it. I really love sitting on
I'm giving thanks.
TV.
Giving thanks for you on Thursday.
Oh, thanks, Oak. Appreciate you.
D, I'm also giving thanks for you.
Deanna, people are saying you look. Everyone's saying you look confused. Sorry for the.
I look confused. No, I'm just trying to locate the NQ chart so that I can see it, and I've got the fourth screen like up here. So if I'm like looking around, it's not because I'm confused. It's because I've got a screen. But I know how we can look. So yeah. Thanksgiving. Yes, thank you, Hoag. I really appreciate that.
If I don't look confused, it's a front. I'm usually confused. So.
Oh, let's face it, we're all confused all the time. So
So JD, you're just kind of hanging around entry. You're up a little, down a little, up a little, down a little.
Yeah, I'm really going to tighten this up. I had a 10-point stop or a 15-point stop, and I'm going to shave it down to 10.
The Patak size stop.
Yes.
He's always looking for those 15 points. 15-point stop. So just taking a look here at the S&Ps,
That old saying comes into play. We've been hearing it for a while now. You never short a quiet market, and I got a feeling this is just going to keep creeping higher until the minutes come out.
1 o'clock.
I mean, the auction failed in NQ as well, and it happened right. You know how I talk about the average daily lows and highs and exhaustion points? Well, Nasdaq likes to overshoot its average daily range. But,
Liquidity.
Yeah, but it did reverse, and now it's creeping higher. So I wouldn't really touch a short there just yet. Maybe like if we're very late in the session. So this is what I mean. If I go back a little bit, this is where the average daily range low was in Nasdaq. So the entire day's average.
Oh, okay.
And then it gets smashed. So the dots turn into dashes. And then we tried to go lower. It failed the auction. And now it's just creeping. I mean, the first point of supply is on the intraday time frame is up here, so right where we opened.
Mm-hmm.
But again, because this is an equity index and because it's Nasdaq, it might just carry on creeping all the way to here, which is where the average session high is. So again, it's all very well to have the orientation levels, but you also have to have observational experience to be able to take advantage of all of these.
Mm-hmm.
So yeah, but I've had very bad experiences trying to short Nasdaq when it's failed an auction.
Quiet.
Yeah.
Yeah, they always said never short a quiet market on a Friday.
Yeah, that's right. Yeah.
Right.
Or generally.
Yeah, right.
Yeah.
All right. Well, we're up against the highs here in the S&Ps. The opening range remains the high of the day. I mean, if I were to be looking for a short, this would be where I would do it because I can risk 2 points.
Mm-hmm.
But I don't think I'm going to. I'm going to be patient, wait till after the FOMC minutes come out and see if I can't find something that comes my way after that. I feel like I was short here at 54.80, 54.48 half, got out down here at like 38 half. 39 even, I think, is where I actually got out. 2 ticks short of 10 points. On a 14-point range, I cut a fat hog in the ass. I'm going to be happy with that for now.
Oh, yeah, definitely. It's a very quiet day in the ES.
Yeah, but just kind of waiting and seeing what happens with this these minutes. And, these minutes can be, sometimes they can be, interesting and drive the market. Sometimes they can be a big nothing burger. I don't,
storm in a teacup, as I like to call them.
Yes, that's it. I was trying to think of that. That's the storm in the teacup.
Yeah.
Hey, hurry up and wait.
Yeah.
Yeah. So we didn't even have any talking feds today. We didn't just.
It's been real quiet. Yeah.
Yeah. So, JD, what are you doing for Thanksgiving then?
Going to my sister's house. She lives in the western suburbs of Chicago. I have siblings. I have 3 sisters and a brother. So, yeah, we're all going to get together.
A whole bunch of family. Wow. I only have one sister.
Yeah, we're going to be staying home. Both the kids, they have their significant others, boyfriend, girlfriend. And so we're just going to cook a whole bunch of food on Thursday. And whenever they come, they can eat it.
Nice.
You get to kind of fight like who you were going to your parents for Thanksgiving. We're going to my parents for Christmas. We don't want to put that kind of pressure on them. So we had that kind of pressure. And so we're just going to hang out and make a whole bunch of food and eat and maybe have a couple of Kentucky snow cones throughout the time. And of course, give thanks to everything. Tomorrow's, it's always kind of bittersweet. We always had big Thanksgivings with the whole family and the kids and everything running around, and we've grown up so much. My parents aren't with us anymore. My older brother's going to be doing his thing. My younger brother's going to be doing his thing. They live, miles. They live up in Wisconsin, so it's kind of tough to get together with all of that. But tomorrow's my mom's birthday, and we lost her like last October, and it was always, for like the last 10 years, I'd pick her up, bring her all the way back down. She lived in Lake Geneva, so that's 90 miles. I'd pick her up, bring her all the way back down here on Tuesday, Wednesday, Thursday, Friday, Saturday. We would do all the cooking together, and I have all her recipes, so it's kind of kind of nostalgic. Of course, a little bit sad because I was always for the last 10 years working Thanksgiving and the turkey with my mom, and you get two cooks in the kitchen. Sometimes that can be kind of interesting. I always used to tell her, I said, are you bossing me around?
Yeah, we used to get that as well. Yeah, when my husband's mom was still alive, she used to come over, and my husband would cook this amazing Christmas dinner, but then she would always have like something to say. So it's like, did you not cut the Brussels sprouts like the night before? What are you doing? And he's like, get out of the kitchen. That was pretty hilarious. And then we would do something slightly unusual. He likes his gourmet food, so he would add an ingredient that ingredient that doesn't traditionally go with that particular dish. And she was like, who puts brandy instead of whiskey in the cream? Like, what is this? And he's like, just be a little bit more open. Like, what? It's just one ingredient. Like, come on.
Be flexible.
Yeah. And she just wanted like a traditional Christmas dinner sort of thing, because obviously we don't do Thanksgiving in the UK,
right?
But Christmas is a big holiday here.
Yeah, we have a whole bunch of different fishes on Christmas Eve because my wife's part Italian. That's the 7 fishes, and then Christmas Day it's the traditional dinner plus usually lasagna and usually some Polish sausage and sauerkraut, because that's what we always had and that's what we have to have. So we're cooking for 40 usually, and there's 6 of us. Yeah.
That's how it goes usually. Yeah. We cook so much food I can't move like at all. It's nice. It's nice to kind of go a little bit overboard sometimes. And this year I've got 8 dogs, so even if we have food for 40, somebody's going to have it.
Yeah, somebody's going to be. And are they snitches? Do they try and like steal food?
Oh yeah. Really? You turn around, your food is gone. There's one time. Like I tried to teach them. I did my best, but it just, with 6 puppies all growing up at the same time, it's a little bit difficult to keep tabs on everybody. So with individual training, they know how to heel, to sit, stay, lie down, or everything. And if you give them an outright command to just stay, they won't touch anything until you release them from the stay. But if you didn't give them a command, it's like a free for all. So one time I did like some sausages in an air fryer or something. So I put them on the side to go and get a drink, to go and get a coffee. So I'm coming back, and one of them is just chewing on a sausage. Like, so I was like, what have you done? And he ran off and put himself in the crate.
Oh, really?
Yeah. He was like, I don't care. It was worth it.
But
he looked so happy. Yeah. So he knew he did wrong, but yeah, it was so funny. So yeah, they definitely steal food. You have to be very careful. They even want to have some tea as well. So if you keep your mug on the side, they will just very, very, very softly kind of come from behind you, just go. And you're like, what are you doing? And they're like, well, we like tea as well. Well, what?
Well, I mean, they're British dogs,
They're British dogs, exactly.
You gotta have a little bit of tea, right?
Yeah. We actually have decaf tea as well, so they can have as much of that as they like. Huh. They're very funny. They're going to be 2 years old in about 7 days, actually. So big milestone. Can't believe it's been 2 years.
We can have a big birthday party for
them. Yeah. We already have loads of people.
8 little cakes.
So. Yeah, I'll probably get them like a doggy cake or something, like a liver cake.
Hey, Ho, guys! Someone in the chat wants to know what your version of a Kentucky snow cone is.
A Kentucky snow cone is basically just a rocks glass full of ice, and you pour some whiskey in it, and that's a Kentucky snow cone. kind of goes back from when I was a bartender, and you had these people that were like, "Geez, I don't know what I want. What should I have this or should I have a margarita?" I'd say, "Why don't you try a Kentucky snow cone?" I'd say, "Oh, that sounds like fun. I'll try that." So I'd give them a bourbon on the rocks, and they were like, "Well, I can't drink that." And I'd say, "Well, I guess I will then."
Well, I just got stopped out of my position. I'm glad I tightened up my risk because it was going to run right through my original stop. So saved a little dough there.
Just saw Mick walking behind you.
Yep, that was Mick.
All right. Yeah, I think we are having a top quiz today.
Oh, yeah, we sure are. We're running.
Yeah, I think we are, yeah.
Yeah. All right. So
that really, time really flew right there. That was, I like listening to Deanna's analysis too. That was great. Thank you.
Yes, thank you.
Do that.
Thank you. What was I was just going to say something, and it like went out of my head.
One time when we were in the market profile lab, you did the same, and then you said something really funny, which I use to this day. You said, I'm having a bit of a senior moment.
Yes.
So funny.
Yeah.
So now every time I forget, like I lose my train of thought, and I'm like, I'm having a senior moment now.
Sometimes if I do this, it'll come back, but I don't think it's coming back. Well, let's get ready, I guess, for the top quiz. Deanna, thanks for your time today. JD, thank you for your time today. Again, I will be on. You guys will certainly be on my long list of folks that I am going to be thanking for twice.
Well, thanks for having me, Hoag. Appreciate it. Great to see you.
Pleasure.
This is Deanna. This is the first time we've shared the stage together. I hope it's not the last. That was a lot of fun. So thank you guys.
Looking forward to the next time.
All right. So I think we are going to take a short break and get everybody ready for the top quiz. And I look forward to seeing you back probably here just before 1:00 for the FOMC minutes. But don't forget, we do have Coach Paul doing group coaching today right after top quiz. Thank you all. Thank you both. Don't forget, everybody, be kind to yourselves, be kind to others, and we'll see you in a little bit. Stick around.
Hello, everybody out there, and welcome to Top Quiz. I am back with a quiz. I emailed the winners, and most importantly, I'm joined by Alyssa. Alyssa, how goes it?
It goes well, Jack. How are you?
It goes pretty well over here, too. We're a little bit short on air at the moment just because it's the Thanksgiving week, but it's good to see all the traders are here. A lot of people still trading tomorrow, it seems, so we hope to be there with you. So if this is your first time playing, click that link and sign up, or go to kahoot.it and enter in that PIN number, and there will be 4 multiple choice questions with 4 multiple choice answers. 3 or entered into a drawing where I think I'm going to give away 30 resets today. But I might do it so that I open it up to people to get 2 right for the last 10 or something like that. We'll see. But that's what we're playing for today. Alyssa, nobody has gotten a perfect score yet. Is today the day that Bonnie has gotten 3 out of 4? I believe you did 3 out of 4 once. We'll have to see what happens.
All right, I'm ready, Jack.
We'll wait a few more seconds here to make sure Karama Futures Trader. That's kind of a straightforward name. Babu Likey. That's pretty good. What we got? Money Baggy Keep. That's real good. We got Money Baggy Keep in here. We can do it. And could someone on YouTube confirm, is my sound out of sync, or is that something I don't need to worry about? We'll find out.
It was a little bit there for a second, but I think you're good now, Jack.
Okay. Make sure to watch your device. That is where you want to answer the questions, because there is a delay between us and YouTube. So we'll just be discussing it a little bit behind. Okay. We got about 830 people in here, so I think it's time to get started. Just watch your device. If I'm out of sync, we shall work. Ready?
Let's do it.
Good. 3, 2, 1, let's go. When futures prices rise above spot prices for an asset, this phenomenon is known as A, slippage, B, backwardation, C, contango, or D, the carry trade.
Rises above. Okay, I'm going to go with contango. That sounds very lovely.
As we mentioned early, it is indeed contango. The opposite of contango would be backwardation. I have the comment to have more universally understood questions. That is difficult to do. I try my best from time to time. Okay. The bragging board here. Kahootie. They ran out of letters, but they were going for Kahootie and the Blowfish, which I really appreciate. That's a really good name. Okay. Let's go on to question number 2 here. Where is MP today? Is MP at Disney World, Legoland, the Grand Canyon, or Busch Gardens?
That picture is
Do you know this
cracking
one?
me up. I actually don't know where MP is. I'm going to guess he's at the Grand Canyon.
Well, not today. He is
Not
not the Grand
today.
Canyon. He's at Legoland, which we mentioned earlier on the broadcast today. Seems like many of you got it there.
Nice.
So let's see if Kahootie and the Blowfish is still there. They are. The Dread Pirate Robber. Everyone's getting cut off. We need a few more letters for names here.
We do.
Face Ripper and Becca with a K. Okay. Ready for number 3?
I'm ready, Jack.
Let's do it. Which of these CME Treasury futures contracts has the longest time to maturity for the underlying asset? I had to put a lot of words there to ask what I was getting at with this question. But is it the UB, the ZB, the ZN, or the ZT?
I feel like it has to be one of the Z ones on here because there's 3 of them. I'm gonna go Z T ZN. I'm changing my book.
I like your logic. But it is indeed the Ultra Bond future. The
Oh.
UB has the longest at 25 years.
Man,
That was hard. It was a treasury question.
a standardized test could never. Usually, that's how they. That's usually how they play those.
Don't worry. I'll give some more resets out to random people who get at least 2 right as well. So I'll do the normal 3, and then I'll give away 10 more. Okay. You ready for the board here? CL Trader. Oh, Kahooti's still up there. Short Bull, top tick. ZB isn't 30, James. I believe it's to fulfill a ZB contract. I believe it's a bond with at least 20 years to maturity. I'd have to look it up, but the UB is 25, so that's the most. Sorry if that question was tough, but the UB is the farthest out there on the yield curve. All right, final question. If Antarctica was a country, it would rank as the what largest country in the world by size? Would it be the first, second, third, or fourth largest country if the Penguins had a constitution?
I think it's the second, Jack.
You are 100% correct.
Woo!
Good on you. Russia is Antarctica. Let's see who knew that out there. ES Hurt Me. That's a good one. The Marvelous Becca. And in the number 1, Fry That Turkey. Good playing there, folks. I will go to the lab and calculate the winners. And in the meantime, Alyssa, this might be the last time I see you before Thanksgiving, so have a lovely holiday.
Thanks, Jack. You as well.
Thanks for playing. We'll take a quick break right now and be right back with Coach Paul for group coaching, and then we'll stick around for Fed Minutes with Hoag. See you then.
Bye.
Welcome back, everybody. It's time for some group coaching. And today we are very thankful to have our very own Coach Paul in the virtual studio. Hello, Paul. What's going on?
Hey, Jack. How you doing? I'm thankful for being here. Happy Thanksgiving to all our Top Step traders out there. Glad to be here. Our topic today is going to be risk. Specifically fundamentals of risk control and capital preservation.
Yeah, that sounds like a real juicy topic. So what I'm going to do is let you do your presentation, and I'll be off camera, but then I'll come in to help with the questions we get from YouTube to help you out there.
Okay, well, thanks. So, risk. It's the basis of trading. Just without risk controls, we're basically gambling. To give you a little bit of my background, I've been in the futures industry for 40 years. Was a member of the Chicago Board of Trade for 15 years, where I traded on the floor and executed trades as a floor broker. I've been a future trader for 30 years. I was also a registered commodity trading advisor for 10 years, and I've been a futures trading coach and mentor for 20 years. And leading to that, until I understood risk and risk management, I really had what would be a roller coaster ride in trading. So we'll start with this. Successful traders recognize that risk is inherent in trading, and they proactively manage it to protect their capital and optimize their long-term returns. Incorporating sound risk management practice is a key factor that distinguishes consistently profitable traders from those who struggle to succeed in futures trading. Again, risk management is the key factor. We've had discussions before about being consistent, and consistency comes from surviving. If you've traded futures long enough and you've lost control and you've blown out accounts, which a vast majority at one time do, if you read books about great traders, Jack Schwager's book, almost every one of them has a story about blowing out. All the great traders. And when they went through that process, they understood that they need to focus on risk management. So I personally have blown out a few accounts. I've made great money and then given it all back. When we learn the importance of risk management and incorporate that foremost in our trading, we can protect our capital. Because without the capital, we can't trade. It's the biggest lesson. Like I said, in 40 years, I've known thousands of traders, and the ones that survive and the ones that thrive are the ones who manage their account. So let's begin with a quote from Paul Tudor Jones. At the end of the day, the most important thing is how good you are at risk control. 90% of any great trader is going to be the risk control. If you're not familiar with Paul Tudor Jones, he's one of the greatest futures traders of all time and in our time. Started trading cotton out of Memphis, moved to New York, and had a hit, where he had to survive, and he incorporated risk controls and focused on risk, and he's now a multi-billionaire. So if he is giving us this advice, we probably want to follow it. And so successful traders understand the importance of risk management in achieving consistent profitability in futures market. We will cover some key aspects of risk management that successful traders often incorporate into their strategies. Again, Paul Tudor Jones amongst many. So the primary goal of trading is to stay in the game. All right. Uncertainty of the future is what makes trading so difficult. And people do not like uncertainty. The reality is the best you can hope for is a method that generally works over a relatively long period of time. Implementing money management increases the likelihood that you will survive and achieve consistent returns. Taking proper, measured losses ensures capital preservation and allows the trader to survive and, I would add, thrive. The inability to take good losses will lead to overtrading and destruction of capital and blowing up the account. Now, here at Topstep, I've been coaching for about 6 months now, and it's this part is the biggest part in trying to pass the combine, is understanding that, you know, especially beginning traders, we try to be right in our trade. And when the market starts going against us, we kind of abandon our plan and we try to get right. With abandoning a plan, the first thing that goes out is risk management. We start chasing losses, trying to make them into profits. I've went through it. I've coached hundreds of traders. I almost to a person, they've gone through it, because the uncertainty is the only certainty we get in trading. That's a hard thing to overcome. That's what creates bad trading. So when we get control of our risk and understand the importance of taking good losses, we can begin to turn the corner and begin to thrive in this game. So it all begins with risk management. So stop loss orders. Determining the amount of capital to allocate to each trade is crucial. This involves calculating the position size based on the trader's risk tolerance, the size of their account, and the specific characteristics of the trade, such as the entry and exit points and the distance to the stop loss. So allocating risk, much like having a risk budget, begins with determining the amount of capital to allocate to each trade. If you're in a $50,000 combine, your risk budget begins at $2,000. Okay, begin there. That's your account. That's your risk budget. And to preserve capital, you should never lose more than 10 to 12% of your account on any given day. So if you want to preserve that capital, just like a business, you can take a 10 to 12% hit on your operating capital and survive. But if you take a 50%, 60% hit on your capital, it's going to be very hard to survive. So determining the amount of capital to allocate to each trade isn't just crucial, it is the key. It's absolutely the key. Okay, the next point, setting stop loss orders helps limit potential losses on a trade. It helps traders define their risk before entering a trade and ensures that losses are kept within acceptable limits. Taking proper measured losses ensures capital preservation and allows the trader to survive. There was a large trading group when I was in the bond floor at the Chicago Board of Trade. I knew a few of the traders and the great guys in a very successful group. And a friend of mine says, we were talking, he goes, oh yeah, our mantra is love your losers. And I'm going to tell you right now, I didn't believe it. I won't say exactly what I said to him, but it wasn't presentable in this forum. I didn't believe it. But after about a year, I'm finally caught on, because this is how you stay alive, is take good losses. And when you learn how, we've had this discussion, and it's in the book, Trading in the Zone, also, Best Loser Wins, is focusing on taking good losses. That's what risk management is. So when you're a new trader, you've got a plan, good, and you are there with big hopes and dreams, and the focus usually begins with making money off the bat. And with the basic uncertainty that's in every trade, you can easily get tripped up. So if you're struggling, understand you need to focus on risk management, taking measured losses and being comfortable with that. Being comfortable taking a loss, 2 losses, 3 losses, 4 losses. It's part of the game. And I myself, when I got into trouble, was when I tried to avoid loss. And if you're struggling and you're trying to get to know more about a market, focus on your risk management practices that allows you to lose and let your winners run. I mean, this really sounds simple, and at its core it is. Executing it is the hard part. So the one thing we're going to focus today is on using the average true range. So many successful traders determine their stop loss by using the average true range, commonly known as ATR. There is an ATR function on every charting package that I know of. So if you're not using it, familiarize yourself with it, and at least get to know what it means. So the ATR is primarily used to assess the degree of price volatility in a financial market over a specific period. The biggest period that's used for the average true range is the 14 period. That's the best one for day trading also. All right. The higher the ATR, indicates greater volatility, while a lower ATR suggests lower volatility. Now, traders use the ATR for various purposes, including setting stop losses, determining position sizes, and identifying potential trend reversals. We're going to focus on using it to set stop loss levels. The ATR helps traders adapt to changing market conditions and adjust their strategies accordingly. Keep in mind that ATR is a relative measure, and its interpretation may vary depending on the asset and the time frame used for analysis. And we'll have some examples on this, but it's very important to understand that the average true range breathes with the market. It's like its heartbeat. If you've traded options, it's the volatility, and it changes. And you have to understand when you're entering that the market changes, the risk changes. It's not steady. So, first example, we're going to go over a chart from yesterday. This is a 5-minute chart of the NASDAQ, mini NASDAQ. And in this example, we're going to start at midnight Central Time. While Europe's just waking up, Asia's just about finishing. And this is usually the lowest volatility period, or ATR. In this case, at midnight, the average true range on the 5-minute was 3.92. Rounded off, we'll call it 4 points. Okay, very slow. And so on every 5 minutes, the high and low on average the range is 4 minutes. So let's equate that into money. Times 20, it's $80. Okay, now we're going to move forward at 8:25 Central Time, 5 minutes before the opening bell. And the ATR is now 9.28. It's basically doubled, a little more than doubled. Europe has come online. The market volumes coming in, and the markets are getting bigger ranges or more volatile. We went from 4 points, roughly $80, to 9.25 points. It's $180 or more. So every 5 minutes. So if you're trading in this time frame now, your risk on average has gone up. The market's going to pick up speed. It's going to pick up volatility. And you need to be aware of that and adjust accordingly. So now we're going to go take the 5-minute, 1 hour after the Chicago opening, 9:30 in the morning. Now the ATR is at 24. And we started at 4, right? Went to 9.25, and an hour later it's 24. So that's $480 every 5 minutes. Well, that's what the market is averaging in its range. Now, one of the keys here is we talk about capital preservation, right? You need to stay alive. That's what risk management practices keep you alive and help you preserve capital. If you're trading a mini NASDAQ and you're on a $50,000 combine and you're trading the mini NASDAQ, you have to put in tight stops. So if you're using a 5-minute chart, for your trading decisions, your risk, whether the market's risk is 24 points. Now, you say, well, I'll just use a 10-point stop. Well, a 10-point stop with the average range being 24, you're going to get stopped out a lot, and you're going to have to rely on luck. Now, if you can operate on an 85 to 90% rate of good trades, you can do that. If you're at 50%, you're going to get chopped up. And so if we want to preserve capital on any day on a $50,000 combine or $2,000, we can't lose more than $200 to $250 to preserve capital. You know, this is $480 every 5 minutes. It's a good reason to use micros. That's 1/10 the risk. You could do a couple micros. But understand, this is the risk you take. And it's the market risk. This is what the market's offering. So next one we're going to study is the half-hour ATR. Bigger time frame, bigger risk. So at midnight, where the 5-minute was 4 points, on the 30-minute is 9.25. So twice as much, and this is the slowest part of the day. All right. Now we come in at 8:25, 8:30 area, just before the opening in Chicago, and now the risk in a half hour is 21 points, 21.5 to be exact. All right. Now, an hour after the open, in a half hour, it's now 33 points. So that's $660 on average in a half an hour. So when we talk about risk management and capital preservation, know what the market's volatility is and your role in it, and adjust. If you're at this point, 1/10 of this risk is $66 on a micro. So when you're going through your plan and you want to go into risk management, using the average true range will help you define the market's speed. And you can use this to position, to put the proper amount of contracts that relates to your capital. I don't know many people who have 90% trading systems that work. I've run an 80% losing one that swing trades that works, but it has to be automated because I'm only human and I can't continue to execute it. But know this, without risk management and understanding the risks inherent that the market's giving you, it's going to be hard to survive. I've equated to sitting at the $100 chip table and you have $100 in your pocket. You can't afford to be wrong. It's not going to work over time. So next one, I'm going to take some examples using the ATR and a mini NASDAQ. All right. And then we're going to risk 2 ATRs. And we're going to go minimum of 2-to-1 risk to reward. And we're going to start with using the 5-minute at midnight at its lowest volatility. So, as we reviewed, the 5-minute at midnight in the NASDAQ, mini NASDAQ, the average true range was 3.92, or indicating an average risk of $79, we'll call it 80. I always round up. All right. So if you wanted to take a trade, all right, buy or sell side using one contract, all right, and I'll go back to the 5-minute chart. Just here it is. So if you bought it or sold it in this area here, using the ATR to define your risk. And one of the questions may be, why do we use 2 average true ranges? Because if you put a stop in within 1 average true range, you're going to get just the natural fluctuation of the market. You're most likely going to get stopped out. And if you've ever run where you get stopped out a lot, that's probably why. It's just a natural fluctuation. So in this trade, say we were a buyer, we wanted to buy it, so we pay 15,842.5. All right, and we're going to put a sell stop with 2 ATRs, 8 points, $160 risk. I'm putting a stop at 15,834. Sorry, I'm missing the 8 there, but that's our risk. Now, that's something you can handle, $160 loss. This is on a 1 mini. Now, our objective is to have a 2-to-1 risk to return. All right. So at this point, we would enter an order to sell at 15,858.5. 16 points. Risking 8, looking to make 16. All right. This happened to work on the buy side. It was really near the lows of the day. Without any prediction, we don't know that. We're just managing risk within a time frame that we can afford. All right. We don't know this was going to be a $320 profit on the buy side, but this is about managing risk. Now, say we had we wanted to sell it. So if you sold at this area, 15,842.5, same risk, 8 points, $160, and looking for a profit of 320 risk reward, and we would buy it at 15,826.5. Well, it never got down to 15,826.5, and eventually we got stopped out for $160 loss. Now, if I go back to the chart, remember we don't know what's going to happen with the uncertainty. If we sold it, man, we're glad we took that $160 loss, because by the end of the day, it was like, it would have been a $3,000 loss. Risk management, maintaining and preserving capital. In my younger trading days, I might have even added to that sell. Try to average into a winner. If you've tried it, you understand why you don't really want to do that. So this is the key. This is risk management. It's all right to lose money well, actually. You've become a great trader when you lose money well. One question that was given to me by my mentor, Peter Stottlemyre, says, who's a better trader? Let's say the NASDAQ's up, like yesterday, it was 250, 300 points. I forgot exactly. But the point is this. Who's a better trader? A trader trading the long side who made $500 with a $6,000 range, or the trader who lost $200 trying to sell it? Now, the answer is, in my opinion, and from my mentors, is the guy who lost, or girl, who lost $200 in a range of $6,000. That is risk management. That's losing well. That's preserving capital. So we're going to look at the next higher volatility time frame, the 5 minutes before the Chicago Open, or the Open. So at 8:25, the market was trading at 15,895 and a half. Okay. Once again, we're going to look at both sides of this trade. So if we buy it at 15,895 and a half, we put in a sell stop with 2 ATRs. The average true range is doubled now to 9.5. So we're going to risk 19 ticks, or points, not ticks, points. And we're going to risk, to do that, we're going to risk $380. Can our account handle that? Well, I have $2,000 in my account and I lose $380. That's a big percentage loss. I'm on trade. So if I review that, my risk management, capital preservation, I need to go down to the micros, maybe 2 micros. That would be 70. Okay, but we're using this example just on a 1 lot mini. So that would fit an account of $4,000 minimum, 5,000. If not, go to the micros. So our objective rate of risk return is 2 to 1 minimum. 1.5 to 2, it has to be. All right. So we put in an order to sell one at 933 for a profit of 760. So we're risking 380 to make 760 on a 5-minute chart. So we're going to risk 19 points to make 38. In this example, I think it was like within the half an hour. It could have been within 10 minutes. Now, yeah, that's all great. Nice profit, good trade. Now, let's say we wanted to sell it for whatever reason. So we have to take the same amount of risk as the buy side. We'll risk $380 to make 760. In this example, we put in a stop at 15 15,914 and a profit objective at 15,876. Well, it never got down to 15,876, and we get stopped out at 15,914 and a quarter for a $380 loss, and that was probably within 10 minutes. Okay, that's a good loss. That was a $2,000 loser about 10 minutes after that. I think it rallied 150 points. Now, taking that loss was the best thing that you could have done if you were selling that day. Now, one of the problems with newer traders is like now it gets near 15, 9, 10, and you're pretty sure it's going to get stopped out, so you cancel the stop and move it higher. Cancel replace. Because I'm just give it a little more room. That's not risk management. That's avoiding loss. I was very good at it when I was younger. Understand, if you are not comfortable taking $380 loss, you can't take the trade. Being comfortable in the loss that fits into your risk portfolio, your account, your capital. That's the key to being comfortable and taking good losses. That is what risk management is. All right, now we're going to move to the highest volatility time frame. So this is an hour after the opening. Okay. At that time, the ATR is 33. I have it here as 24. It's even bigger. So add $200 to this, but still, if it was 24, your average risk is $480 every 5 minutes. And add to that, you're going to add to that price another 200. So it's $600, almost $700. That's how fast the market's moving at this point. Now, from my experience, if I put in a stop that's within that 33, and say I only want to risk 20, I'm probably going to get stopped out a lot. And that's where frustration begins. You know, well, there's hunting stops. Okay, they might say that, but that's the way the market's moving at that point. All right, so your risk is now almost $700. That's what the market's giving, not what we want. Now you can do, if you're trading a micro, it's 1/10 of that. We can bring it down to $700 to $500. All right. That is position sizing. Not, if you're not position sizing correctly, you're not using ATR, and you're just trying to be right. If you've ever been in a situation, you quickly forget that this is about your account, and then I've heard this, I've done it, I've seen it thousands of times. I don't know what happened. Because at that point, you're not focused on your risk, which is the number one focus. As traders, we are risk managers. I want to go back to Paul Tudor Jones. 90% of great traders, it's about risk management. So when you find out, if you've ever been through it, and almost every trader has, like I said, all the great traders have gone through this and then they come back to, well, I have to focus on the risk because I have to stay alive so that when I have a good trade, I can let it run. So let's use let's say it's 24, the ATR. I'm risking 2 average, 2 ranges because I don't want to get stopped out easily. All right. If it's within 1 ATR at 10 points, it's probably an 80% chance you're going to get stopped out. All right. So in this example, if the ATR is 24, with 48 points is our risk. So we're risking $960. And to have an objective of 2 to 1 or 4 ATRs for a $1,920 profit. And by the way, the market gave this, didn't get stopped out. What size account do you need to have to take this risk? On one trade at $480. Okay, if you have a $2,000 risk budget, and this is in 5 minutes. Okay, that's almost $500. That's 25% of your account on one trade. And you're trading one mini. I don't think I'd have to go into it deeper than that. You need to trade micros. There's no shame in that. I remember when the NASDAQ started, I believe it was at the 3,000 level. Okay, the size of the contract was like 4 times what it is now. So this is relative terms. And by measuring and understanding your risk and managing it well, you can start placing bets or trades that make sense for your capital. At this point, I would bring up a guy named Edward Thorpe. If you've been around a while, you might have heard of him. Edward Thorpe ran Newport Partners, I believe is the name of the hedge fund. But before he was a hedge fund manager, he was a brilliant MIT mathematician, professor at University of California, and believe it or not, a card counter. In his mathematical mind, he figured out how to beat the dealer. He wrote a book in the early 60s called Beat the Dealer. And people laughed at him. So you can't beat the dealer. It's not possible. Well, he did the math. And if you read his book or if you study him at all, he understood how cards can move. And he counted them. But without risk management, it wouldn't work. So he had to have a system of taking losses until the cards lined up. And when they lined up, he pushed it. He took more risk. But without that, he could make bets. And not be around when the cards lined up. It was really important. So if you really want to get deeper into this, read about Edward Thorpe. It's the essence of risk management. That's what we are as traders. We're risk managers. You can, I remember when I first started, I started when I was 19. I was in college. I don't remember going, if I could only get the Wall Street Journal for next year and know where they settled. Well, I'll have 5 Ferraris. My mind was racing. And it wasn't until a few years later when I started trading going, that's a pipe dream. You could have the price for January of November of 2024. We could have all the settlements and still not make money. Because if in that time you didn't manage your risk, You don't know what path the prices took. So when I realized that, I realized, wow, it really, really is the key in the essence is risk management. Without it, we can't survive as traders. So if there are any questions, we have a few minutes left, and I'm open for some questions. If not, I can review.
Well, let me check to see if we got any here, Paul. If you have any questions, feel free to drop them into the chat. Somebody asked earlier if you ever use time stops.
No, I haven't. I know what they are, but I used price stops, and when I didn't use stops, I understood the time stop, but I used price stops. I trade 12 different markets, small, so I used price stops. And the average true range measures the price through time. So, and how fast it's moving. So, and I know that some of the biggest fund managers, the Turtles, Richard Dennis, Paul Tudor Jones, I could go on. They use the average true range to measure their risk. I do know that. So if they're using that, it's probably a good idea for myself to use it, or yourself, and it makes sense. Because then you can put the right size trade on. I understand the temptation to put a bigger trade on to make money quicker. Well, that's what are you relying on then? Luck. And I don't know about anyone else, but whenever I relied on luck, I got disappointed. Right? I mean, if you win the lottery, can you win it again? Well, maybe, but I wouldn't rely on that. So when we talk again, consistency. Consistency is what makes a good trader. And the best traders I've seen consistently take good losses. And the best traders I know wouldn't tell you what their position is either. It's just good, bad, or indifferent. You wouldn't know. That takes time, and that takes experience. So once again, protecting your capital starts with risk management. I'll quote from Reminiscences of a Stock Operator. Vision without capital equals heartache. So if you blow up account, and how many times have you heard this? You even said it yourself. I have. I knew this was going to happen, but I can't make a trade because I don't have any capital. Right? Well, so what you're really telling yourself, I didn't manage my risk. So once again, risk management is the heart of trading. You know, one more example was a guy named Tom Willis, who was one of the original turtle traders. He traded the Board of Trade, started at the mid-am, mini contracts, legendary trader on the floor. Very well, very successful. So there was a drought in the Midwest, and he was a big soybean trader. And it was on a Monday, and I was still working for the exchange. I was the pit reporter. I put in all the prices, and someone came in, a farmer, and hung up a dried out soybean plant. All right, and he hung it in the pit, and Tom Willis walked in. This is one of the largest soybean traders. He goes, "What the heck is that?" No idea what a soybean was. Probably drove by him in the Midwest, didn't know, but he was one of the biggest soybean traders. And he understood risk and trading. So trying to know more about what market you're in is yes, go ahead.
Real quick, Paul, I got to make an announcement that FOMC's coming out the minutes in about 30 seconds.
Oh, yeah. All right. Well, then
we'll
leave it at that.
In to do that.
Great session, Paul.
Oh, thank you.
That was awesome, Paul. Thanks so much.
You're welcome. And I hope everybody got something out of it. Focus on your risk. Whatever your trading plan is, understand your risk and manage it and thrive.
Don't get a little thing here in the S&Ps. Paul, you can stick around if you want.
Thanks, Paul.
Sure, I'll stop sharing the screen. Let's see what the minutes are going to bring us.
The minutes are out. I'm watching Financial Juice to see if there's any comments that come out. Not a huge reaction here so far. The dome is pretty thin. As you can see, you've got maybe, 10 to 50 on the bid and offer on the S&Ps, which is usually 100 to 200, sometimes even more than that. So the dome is pretty thin, a little bit illiquid here. Still waiting for some information to come out here on Financial Juice about anything that they commented on. Takes a little while for that stuff to come up. But so far, not a big deal here. Doesn't look like anything real shocking has come out here.
No. I don't think big
Still pretty
managers.
thin in the dome.
Usually the case.
Yeah. Well, picture yourself as a big money manager. What are you going to put on right before Thanksgiving, right?
So starting to get some stuff. All of the participants judged it appropriate to maintain target interest rate at 5.25 to 5.5%. It sounds like they were in agreement. They all agreed that the policy decisions at every meeting would continue to be based on totality of incoming information. So at least they're paying attention. Just kind of trickling in here as far as the participants judged that maintaining a restrictive stance would support further progress towards goals while allowing time to gather additional information. Not a big reaction here. Starting to see a little bit of the blood coming back into the dome here.
I like that term.
The blood, like that.
Yeah. Participants noted that further policy tightening would be appropriate if information showed progress to inflation goal was insufficient. Participants noted that inflation had moderated over the past year, but remained unacceptably high and well above the 2% target. Nothing we don't already know here. Participants judged demand and supply in the economy continued to come into better balance. Probably a little bit of a comment on supply chains there.
You can vamp a little longer, Hoag. I'm trying to get these winners from the quiz set up.
You got it. You got it. Participants noted that there had only been limited progress in bringing down core services, excluding housing inflation. Participants saw labor market conditions as tight, but had eased since earlier in the year. Staff's economic forecast was similar to the September projections. Many participants saw measures suggesting long-term Treasury yield increases were driven by a rise in term premium. They all stressed the need to see more data indicating inflation pressures were abating, to be more confident of price increases returning to 2%. Wanted more data to see if prices are going to return down to 2% inflation. Fed rate expectations little changed after the Fed minutes. Fed first rate cut seen likely in May of 2024, fully priced in for June of 2024.
Is that a rate cut? Did you say?
That is a rate cut.
It's funny you said it because the 10-year is absolutely dead.
Doing nothing, right?
Doing nothing. It's at a quarter point between the bid and offer. That's about as stale as I've ever seen it.
So, pretty much a big nothing burger here today.
It's time to start eating for Thanksgiving, I think.
Yeah, looks like it.
Yeah, pretty much.
Looks like it.
A big turkey. Although the crude is rallying off the news. So, wow. I watched the treasuries a lot. I just wow. Dead.
Nothing, huh?
Not even nothing. Looking at the Dom and the 10-year, I wouldn't know it was open. If I looked at that, I would have said, "Oh, it must be closed for the holiday." But
well, for all intents and purposes, it might be.
Yeah, absolutely. We're talking.
So the full meeting minutes are out. You can read them at your leisure if you find them. They're on Financial Juice if you want to read them. If I want to take a nap, I'll usually read them.
Yeah, Fed speak is perfect napping. I love the term you use, the talking Feds.
The talking Feds, yep.
Remember Greenspan? He was the master of all masters of talking out of both sides of his mouth. What did you just say?
Yeah. I'll never forget when he uttered the words irrational exuberance.
Was at night. I was in the night bond pit.
The bonds
came out. Oh my God! No one knew what hit him. Right? It was that anything can happen thing. Oh, and some people just got run over. And I was a broker at the time. I did all right, but I think it moved two handles. Well, it's $2,000 on a one lot.
Right.
In a matter of less than a minute. If you got stuck on something. Oh, it took a lot of to dig out of.
You got a thick deck and that happens, you are a busy guy.
Yeah. And you got to take care of that side that matters, right?
Wow.
So
yeah, so I mean the stream has kind of slowed here. I mean, I think that's about all we're going to get from the meeting minutes.
Yeah.
All right, Ho, can you hear me?
Yes, sir.
Just want to make sure because my internet's been a little bit screwy, or the Ant server is right now. But I'm going to announce the winners from Top Quiz. But first, I just wanted to clear up. There was a lot of hate coming about which we can show the question again. James, that's that purple screenshot. The question was, which of these CME Treasuries futures contracts has the longest time to maturity for the underlying asset, Hoag? And the answer was UB, but some people were saying the ZB is 30 years. Well, that's not really the underlying asset. Okay, right here is the UB. What you deliver into it is 25 years or more to maturity. And for the ZB, it's 15 to 25. This is from the CME.
Okay.
So,
wow.
Just making clear we're all on the same page.
Clear everything up. There you go. All right. Thanks.
Did you work for Trans Market Group when you came up with that question? that is down deep.
The easiest way to answer it.
That's a great question.
Here's the question I wanted. The question was really going to be like, what Treasury futures contract is the furthest out on the yield curve, right? It's the UB, but I guess it was harder than I thought it would be. So anyway, let's reveal the winners. I said, yeah, the old UBs. These were the 20 winners. Kahootie and the Blowfish won.
I love that.
These are the 20 winners that got drawn from everybody that got one or more right. I'll leave this up for a second. And then if we want to go to the next photo, James.
Some of these names are pretty creative.
We will see.
Yes, I love some of these names.
Yeah.
I think my ant server's frozen. Okay, we got one more coming. There's 20 more. Once again, riveting end of the day.
Yeah. Right. Yeah. Well, we didn't get much help from the FOMC minutes to be a riveting end of the day either, right?
Unless you're short
No,
valve.
not really. James is bringing this in real quick. Sorry, we didn't make this so tense, but here we go.
Homie.
And
Diva.
there are the other 20 winners.
Elwood Blues.
Top Sean.
Very nice. Well, congratulations to you all.
And I'll send that email out within the hour or so. But good stuff, everyone. Paul, thanks for sticking around. Thanks for jumping back in. But I think it's about time to sign off for the day.
Yeah,
All right.
let's do it.
Have a great afternoon and good Thanksgiving, everyone.
Good to see you, Paul.
Good to see you, sir.
And good to see all of you. We'll see you tomorrow morning, 8 o'clock for the opening call.